Good morning, everybody. Long time no see. Welcome, everybody who just came over from pre-market prep. Look, it's 9:30, 9:32 actually, on a Thursday. If you're watching pre-market prep, we were feeling a little bit down this morning, a little bit bearish. Wasn't a great day yesterday for the market, so why not take some time, as Peter Tuckman just said on pre-market prep, step away from the screens, step away from the charts for a little bit. We can come back to that later. But why not, take this time? You're not doing well. Step away and learn about individual companies, right? So what we're trying to do at Benzinga is we're trying to vary our programming up, right? You guys know what we have on our channel. We have a lot of discussions about stocks and the market and technicals and charts and crypto and NFTs and all these things that are relevant for that day, right? But what we're not doing as much of, and we want to do more of, is create content that is not just relevant for today, but is relevant for, I don't know, a few weeks, a few months, a few years, right? Some evergreen content that you can come back to that is more educational in nature and not necessarily as topical, something that's not going to be irrelevant next week, right? That was one of the ideas behind this very show, which we call Benzinga All Access. If you've seen it before, you know the drill. We have gotten a group of executives, of CEOs, of founders today to come on the show and talk about their companies, not talk about their stocks, not talk about why their stock is up, why their stock is down, why their stock is sideways, not even really to talk about their financials. Nothing against financials, but I've sat through a lot of investor presentations and they're boring. That's not what this is. This is not investor presentations. This is me and a founder or CEO or exec in the C-suite talking about them and talking about the story of their company. And hopefully you learn something, because here's the thing. There are, I don't even know how many public companies there are, probably like, I think 30,000, maybe more than that, public companies in the United States. The vast majority of them do not get any attention, right? We pay attention to the S&P 500, right? Or maybe even like the Russell 2000. And that's it. But there is so much more out there. So much more. Companies doing cool things, right? To give you an idea, companies we have on the show today are, the one we're going to talk to in a few minutes here is like protecting your biometric data, right? When you like scan your face or scan your thumbprint in your banking app, right, to cash a check, they're protecting your data, your biometric data. We're talking to companies treating addiction. We're talking to companies working on the blockchain. We have so many cool companies on the show today. Companies protecting us from cyber attacks, right? That companies that have been doing digital marketing on the internet for almost 30 years. That they have cool stories. These companies have cool stories, and we want to let them tell it, right? The idea that I always tell people about this show is it's not an investor presentation, right? It's also not a podcast conversation. It's right in the middle. It's right in the middle of those things, right? It's me and them talking about the company, telling their story. Because if I've learned one thing from being at Benzinga for as long as I have, it's these companies, these people, they have really cool stories. A lot of them, right? And we're not here to tell you to go out and buy this stock, right? That is not the point of the show, right? The point of the show is to tell you about the stories and the people of companies that are out there right now, because there are so many good ones. We're going to have a few of them on the show today. So a few things before we get started. First things first, I have to grovel, as I always do, for likes. The more likes we get, the better. The happier I feel, the better I feel about myself, and the better these videos perform on YouTube. Don't ask me why. It's just the way it is. So please do me a solid and hit that like button. I would really appreciate that. The second thing, as it said at the top of the video there, this video is demonetized on YouTube for a reason. It's because the companies that are on this show today have paid Benzinga to be here. But they do not know what I'm going to ask them. They do not even know what you, well, how they know what you're going to ask them, right? But we have Q&A. If you have questions for these companies, no holds barred. Drop them in the chat. If we have time, we'll get to them. I try to save time at the end of every one of these things for questions from you. And if it's not like crazy inappropriate, I will. Yes, thank you, Patrick. We will ask them. So they don't know what I'm going to ask. They don't know what you're going to ask, right? So there's that. But the caveat is they have payments are going to be here. Just so everyone is aware, YouTube knows that. You know that. I don't want anyone crying about that because now you know. We all know that. So I grovel for likes. I gave you the disclaimer. I think I got through all my housekeeping items I wanted to address. What's up, everyone? What's up, Maddie? What's up, Ryan? James, Lisa, Leia, Born to Be Free, Master of Stonks, Vernon. What's going on? What's going on? What's going on? Again, different kind of show, right? Next year, I'm going to give you guys a quick teaser. Next year, we're going to be doing these on a weekly regular occurrence. And the idea, again, is to just give you something different, not just 8 hours of the same kind of thing all day, every day, because there's more to life than just what the market has done in the last 5 minutes. So, it's December. It's the end of the year. Let's put aside the charts and your MACD indicators and your support and resistance for a little bit, and it's story time with Spencer. So with that, maybe that's what I should have called this show. Story time with Spencer. Maybe I'll have to petition the powers that be to change the name. Screw it. I'm changing the name right now. Story time with Spencer. Let's bring on our first guest here, Gareth Jenner, the co-founder and CEO of Trust Stamp. Do we have Gareth? Yes, we do. Let's bring Gareth on the show.
Hello, Spencer.
How we do? Where in the world are you located right now?
Well, right now I'm at our Research and Development Center in Malta. But I'll be back in
Malta
next week.
Wow. And but where's home base for you?
Atlanta, Georgia. That's where we started the company.
Okay.
But we now have our team spread across 7 countries.
Okay, so before we get to Trust Stamp, I was reading about you. You have a very interesting background. You've like gone in and out of like the higher education industry. What would you call it? Industry. I'm not sure. You were in tech. Then you went to like you started at like a school, and you like did that as like a side hustle, but then it became your main hustle, and now you're doing back in tech. So tell us about your background and sort of how you ended up, at Trust Stamp.
Sure. So I'm a reformed lawyer by background,
okay.
a British lawyer. Became engaged with the tech an awfully long years ago, before most of our developers were born. And law and tech were really always my core career. And then back now, about 14 years ago, some investors in a company that I was working with asked me if I'd take a sabbatical to try to turn around a school that was struggling. They had been funding the school, and they tried to work out, is this viable? And so the theory was, go off for a year, purely a business perspective, and see if you can turn it around. Well, I fell in love with it and ended up growing the school, creating a university that was a spin-off from the school, all non-profit, till one day my wife said, you do realize you have to go back to work one day and build a pension. And so it was back into the world of technology. But strange access to the world of technology, which was that at the school, I mentored a lot of young people in terms of their potential interest in business and technology. And one of those students contacted me after he'd gone to college and said, I'd like to start a company with you.
Oh, wow.
He and I started a company together. Purely to support him, we exited it really fast, having built about 3.5 million users. And then a number of years later, a young man who was in fact dating one of my former students asked me to mentor him. And that was how I met my co-founder.
You just gave everyone a great idea. Everyone, we should all go into teaching. That's an investment in our future. Plant seeds, right, in the students, have them come back to us later on, and then go into business with them. So in 2015, this other a boyfriend of your other student comes to you and says what? Says, I want to start a company, any company, or I have an idea and I want you to help me with it.
No, absolutely. What he said was, I want to take a shot at going into business. I have no college debt. I'm prepared to live out of my car.
Okay.
Will you mentor me to give this a shot? And so I said, well, look, we can take some IP that I've been working on, and we'll treat it as a customer discovery exercise. It's how you're going to learn lean startup. Threw it at him, started to teach him lean startup methodologies. And then he came back with some astounding customer discovery, which was there was a huge hole in the market. And then before I knew what was happening, he told me he'd quit his day job and Trust Stamp was going to be a business.
And so what is that business?
So essentially, we answer two questions. Who are you? Should I trust you? And we do that through AI-powered software solutions. The range of use cases is really extraordinarily broad. For one of the S&P 500 banks in the United States, we onboard new customers. We let them back into their accounts when they're locked out, but we also identify the bad guys. For the Department of Homeland Security, we recently secured a contract where when somebody crosses the southern border and they want to admit that person into the United States, we're providing them with geolocation technology, which allows the person to come into the United States on a trusted basis. And then zoom all the way over to Africa, where we're working with MasterCard on the creation of digital identities for people with no identity. You know, there's about 2 billion people in the world who have no means of asserting an identity. And our job is to create for them a digital identity, which means now they can transact, they can achieve financial and societal inclusion. So a really wide range of uses.
So, but what exactly is the technology?
Absolutely.
Yeah.
So we're all familiar with biometrics. Over the last 5 or 6 years...
No, in case we're not, explain that.
I am going to.
Okay.
Over the last 5 to 6 years, there's been a huge boom in terms of our accessing accounts, accessing devices, using our face or finger, typically. And if we think about Apple phones, they have gone back and forth between face and finger, but we use it at airports, we use it in banking applications, we use it in all sorts of ways. And biometrics are really convenient because unlike usernames and passwords, we can't forget our face.
That's
but
true.
Now think about it the other way around. When you lose your username or your password, you change them. Well, what happens if your face is metaphorically lost? And what I mean by that is you've given your biometrics, your facial image has been stored somewhere, and probably a template has been stored. So you've now given that away. And for the rest of your life, if somebody else has control of that image and that template, they can potentially take over your identity. Now, what you'll hear is everybody says, yeah, but it's encrypted. So why do we ever get any data losses? It's encrypted so the US Office of Personnel Services lost the biometrics of everybody in the United States with a security clearance. Within the last couple of months, the Australian government admitted it had lost the data from all of its identity cards. So you give these away and you could have lost control of your identity.
Wait, so just to be clear, they're saying the data wasn't stolen, it wasn't hacked, they just lost it?
Well, it's a polite way of putting it.
Okay.
You know, in the case of the Office of Personnel Management, the belief is that the Chinese government helped themselves to it, but there's never any evidence in this situation. So what do? So right now, you give up your face, and it and a template get stored. So what we do is to take that template and destroy the vast majority of it. So we literally delete the vast majority of the data. Then we use cryptography and we inject what's called noise. That's garbage data that we put in place of the data that was destroyed. Then we run it through a neural network. So what comes out the other end is not directly identifiable as you in any way. It's a series of numbers and symbols, and it cannot be rebuilt into your face or your fingerprint, or your palm, or whatever it was you gave up. But using our software, we are able to say, is this you if we see you again? But you can put that data on the dark web. Nobody can use it. It has no relevance whatsoever. So we protect your data. You gave it up, but now we protect it so it still has its original use case, recognizing you, but nobody can use it against you.
This is like, honestly, I know you're not meaning to do this, Gareth, but you are scaring me. Okay. I'm sure maybe you get that a lot. Maybe you don't. I don't know. So, okay. So that's the problem. And there is the solution, your solution to the problem, right? I guess, like, what makes your solution different than what is already out there?
So what's out there today is that people say we encrypt. Well, anything that can be encrypted can be decrypted. The solution that we have is irreversible. So we call it an irreversibly transformed identity token, meaning it can never be turned back into your face, your palm, your finger, or whatever. So that's fundamentally different. There's no one else in the world that can do what we do in that respect. But there's a couple of other
why is that? Why is that?
Well, we spent about $15 million and 5 years on what is a set of algorithms. A huge amount of work in order to work out how much data could be destroyed from any particular biometric modality. We have 17 patent filings today, 4 of them issued. I think the 5th issues in the next week or two. So really, really solid IP behind this idea of protection. But I hate to say this, another practical reason is most companies in the biometric field aren't really that worried about it. They simply say, we encrypt. But one of the other things to remember, if I want to scare you, is we've all heard these words, quantum computing.
Please scare me more, yes.
There's no encryption system in place today that realistically, within 5 years, will stop all of your biometric information being decrypted by a nation state, if they can't already. And within 7 to 8 years, every fraudster will have access to computing power that can decrypt everything you think is protected today. What we worked on was a solution that is quantum computing proof. That's another reason it's fundamentally different.
Okay. So, but then what are you doing with the data that you collect, right?
Well, we don't ever collect it. So if we look at the solution, for instance, the Department of Homeland Security, on the cell phone, your face is captured and turned into the identity token on the cell phone in your hand. All that's transmitted to the server is the identity token. We don't receive your face. In fact, in that case, the token goes straight to Homeland Security's computer. Your face isn't stored anywhere. It's gone.
Okay. So we're talking about face scans, you know, that the government could use for identification, but also that private companies could use, right? Like the first thing I thought of was like my bank, right? When I go to like deposit a check, you got to do your thumbprint or whatever. Or when you have to scan your face, like all the phones have like Face ID, right, to like unlock your phone, right? And I admit that it never occurred to me before I was looking into your company that someone else could have my facial data or my thumb data, so I guess like. What is this? I have so many questions here. But again, you're scaring me here, so I'm flustered. So, like, what is to stop another company? I guess like what is to stop another company from doing what you're doing? And like who else is working on this? Because I guess why don't we know more about this? There's a lot of questions at once.
Sure. So the S&P 500 bank was one of our original investors.
Sure.
And in return for that, they had an exclusive right to use it for financial purposes till the end of 2018. So we didn't go to market until 2019. And we immediately had another client swoop in and basically used up the entire capacity for 2019. So at that point, we realized the size of the market, went out to raise capital, which we did last year, and we only took the product to market last year. If you Google TrustApp, you will find the number of awards that we've received in the last year. So super fast growing. But in that early stage of that market growth curve, what we focused on is really, really big clients and very few really big clients. But now what we're doing is making it available to medium-sized companies also.
And okay, so yeah. So I mean, can you share how many clients you do have, or are going to have?
Sure. Well, we have 15 clients today, but you have to understand that we focus on clients that are seven-figure revenue numbers. You know, the Department of Homeland Security contract is public information, and you will see that is an exceedingly large client. And so that's where we focused. We're not a biometric company. We're really a data protection, data privacy company. But the people you see us as competing with, the biometric companies, often spend 70% of their entire expenditure on sales and marketing. The difference is we spend 70% on R&D. So we're very different in terms of the technology, and that's why we're very different. And nobody else has this type of technology. They haven't invested in the way that we have in looking ahead at the future and something that will still be valid in 10 to 12 years. They're farming their existing products.
Is there anything you have like IP protected or anything like that?
Yes, 17 patent filings, and as I said, 4 have been issued, and I think a 5th issues in the next 2 weeks.
Okay. I'm curious, like, what kind of conversations have you had with other, in addition to outside of your clients, or maybe with your clients? Has it ever come up like, oh, like some other companies is also working on this, and like I guess the nice way of putting this is, like, in theory, would you be open to a takeover one day of a larger company? Because you talked about, you know, or having experience exiting companies already.
Well, we went through it until we actually took the company public. We were getting an approach every 2 to 3 weeks in terms of a potential buyer. We made it clear we weren't for sale. Obviously, once we become public, we have a different responsibility. And what we tell everybody is we have a duty to take it to the shareholders if we consider it to be a credible offer. But our growth curve is such at this point that that doesn't really attract us. Because we think that our value in 1 year, 2 years, 3 years is very different to our value today.
Okay. Hey, if anyone in the chat has questions, drop them in now. We will ask Gareth Jenner, the co-founder and CEO of TrustStamp. Here's one from James Santangelo. Is there any plan to go for government subsidiaries such as the TSA, or to go? Let me read it, make sure I'm reading this right. I'll bring it up on the screen so you can see it too. Yep. Is there any plan to go for government subsidies to be used on a more broad scale?
There is. And in fact, we are in discussions in the United States with a number of other government departments. In the United Kingdom, we were selected for the Home Office trial for new biometric systems for immigration. And we're just completing that trial at the moment as one of the shortlisted vendors. And we have 3 other countries who are in discussion about using it. But in the US, the scope is huge.
Aren't there national security implications, though, of you working with multiple governments?
No, because again, the way this is designed is we never receive any data. And in fact, our software never stores any data that is troublesome whatsoever. In the case of Homeland Security, it runs on their computers.
Okay. Question from Born to Be Free in the chat. How long have you been working with quantum computing to know what the hash rate will be to encrypt a face at the quantum level?
So at the quantum level, we created algorithms which cannot be decrypted. So quantum computing isn't actually a threat to what we do. We don't have to worry about that hash rate. You've literally destroyed the original data. So it's a very different concept. Where quantum computing comes into play here is for those who are using conventional encryption. And the forecasts are that within 2 to 3 years, quantum computing will be readily available to break that decryption. But as we destroy the data, quantum computing can't recover what you've destroyed.
We're talking about biometric data here, which when I hear that, I think of thumbprints and faces, like I said. But are there what other types of data am I not thinking of? my own data. I mean,
absolutely. Well, everybody's familiar with the concept, at least, of iris, but of course, our standard cell phones aren't able to collect iris. So usually, you have to think of fingerprint and face because that's what a standard cell phone can collect. But for instance, we can do touchless palm. If you want something a little out there, we actually use finger ridge. And so we can recognize the ridges of your fingers on a touchless basis from your cell phone. But we talk about biometric data. You can actually use exactly the same techniques to tokenize any type of personal information to recognize you in the future.
All right, that again made me feel all warm and fuzzy. Gareth Jenner is the co-founder and the CEO of TrustStamp. So just to close this out here, Gareth, please wrap this up in a way that does not scare the bejesus out of me. Why should I not be afraid here?
Because the way this is designed, you control your own data. You can choose who you give this data to, you choose how it's shared, you choose how it's used. You're not giving us, or in fact our clients, that data to freely use. In fact, in all of these mobile applications, your data never leaves your device.
Not everyone can say that. Gareth Jenner, the co-founder and CEO of TrustStamp. The ticker is on the screen, by the way, guys. IDAI. Maybe run through the chat real fast. Make sure that I didn't miss any questions. I don't think that I did. If I did, I apologize. No, I did miss one. I apologize. Stuart Miller, question for Gareth. What does implementation look like with the customer as far as timeframes, challenges? What is your sales cycle, I guess?
Yep. So let's start with sales cycle, because with large organizations, the sales cycle is relatively long, particularly with a brand new technology. Implementation is much faster because we are completely agnostic as to how it's implemented, meaning in some cases it's on server. We just deliver Dockerized containers. In others, they just call an API. We delivered it on mobile as an APK. So it can actually be implemented incredibly fast. And I mentioned that one of the changes is we're now going to be offering it to companies that aren't necessarily multi-billion-dollar companies. And that's done through what's called an orchestration layer, which simply means click to implement. That easy. So the biggest delay is the decision by a commercial organization to commit to a new technology.
All right. Gareth Jenner, again, co-founder and CEO of TrustStamp. Gareth, this literally feels like we're in a movie right now, but I guess it's real life. So a pleasure to chat with you. I learned a lot. I think we all learned a lot. And we'll have to definitely not forget about this threat and what you're doing to prevent it. So thanks for coming on today. I appreciate it.
Thank you for the opportunity.
All right. All right. Hey guys, smash that like button for for quantum computing, right? It's here. We're not talking about like Ant-Man. This is like real life. Seriously, I didn't know anything about what any of that was before I started doing research and to prepare for this conversation. So I feel like my eyes have been opened a little bit into. I definitely didn't know about the thing about the government's, losing massive amounts of data. So hey, the fact that we've got people like Garrett and companies like that, like TrustStamp, trying to solve for it does make me feel a little better. But let's move it right along here. Our next guest is here. I see him backstage. His name is Chuck Piluso. He is the CEO of Data Storage, ticker DTST. Let's bring Chuck on the show. Chuck, good morning, sir.
Good morning, Spencer. How are you today?
Good. How are we doing?
We're doing fine.
Excellent.
Getting ready to run to the office, but I wanted to get this done first.
I appreciate that. I hope you're not actually going to physically run. I always start these things. Just tell me a little bit about your background and sort of how you ended up here, and then we'll get into data storage and what you guys do. Sure.
I went to work for a Fortune 10 company out of school, from sales to sales management, product management. Went into from ITT Corporation to United Technologies as general manager of New York. And I started knocking on doors in after graduating on Park Avenue and starting at the top of the building. Now, if you do that, you get arrested. So you need to use other techniques. So for the most part, after leaving those corporations, started my own business. I was built an international carrier, which was the 5th largest in the United States, called International Telecommunications Corporation. And eventually we changed the name to RSL. Had a carrier for CLEC for local services throughout the East Coast. And then I was an early investor and founder in this company. 2001, I invested some money in this. 2007, 2008, I became actively involved.
So tell us about data storage. Your tagline is you want to become the Amazon Web Services of IBM Power Systems. First, maybe for those who don't know, explain what an IBM Power System is.
Sure. These systems run mission-critical applications behind the scenes. So if you look at any mid-level or enterprise level, they have these IBM systems, not all, but let's just say 95% have these systems in their environment. So you'll find them in retail, you'll find them in manufacturing, distribution, government is a very large user of it as well, finance. So these systems have tools, and those tools, folks are building software on it. Just as an example, a recent survey that was done, around 76 to 100% of the companies that use this have custom applications that have been built on it. So it's very difficult to migrate off of it. This is really about the software that has been built for these systems that you really can't migrate so easily over to AWS. You really can't.
Why out of curiosity?
Why? Because they don't run on an AWS platform, on an Intel platform. And it's a completely separate operating system that has a high level of security, has a database that's in the operating system as well. So these custom applications that are running really mission critical. So when we talk about high processing power, that's what we're talking about here. So, you know, a lot of times in companies, you'll find a separate group that focuses on these IBM platforms.
What kind of, I mean, this is a broader question, but like what kind of companies? Any company that uses an IBM?
Foster Grant, Philip Van Heusen, you know, the Atlanta Falcons, you know, you can just go across the board on most every company.
Data storage as a company, you guys have had a very interesting year, very eventful year, right? You uplisted earlier this year. You had two, actually not one, but two raises, capital raises. You did a deal. You bought a company called Flagship. I guess put all that in perspective in terms of where that leaves the company right now.
Sure. We run the company as the public company. We'll call it the parent company. But each of the companies, when we do an acquisition, we keep all the companies separate with the founder. They're running as an entrepreneur. And in the case of Flagship, for example, they sell equipment and software in the IBM space, but they also do data analytics and artificial intelligence. They focus on cybersecurity. They're one of the few IBM Gold partners. And so with that, when we look at each subsidiary, each one is focused on, in some cases, different products, but there's also some cross-filling. We have around 450 customers, just to give you an idea of the size and the scope, you know, of what we do. So there's cross-selling. So when we buy a company, or we move the original data storage corporation, we call it DSC right now. DSC has infrastructure in 6 data centers, four in the United States and two in Canada. So now the data analytics folks out of Flagship will cross-sell, because once you have the infrastructure, you actually have the ability to do disaster recovery, cybersecurity, and data analytics, you know, on that. So when we talk about the interesting year, we did the acquisition of Flagship at the end of May. We closed on that. We uplisted to NASDAQ. We were in OTC hell since 2007, 2008, when I got back involved. So it took us that long to uplist. And we raised, today we have around $13 million in cash, you know, on a balance sheet. And that was from 2 of those raises that took place in the May and July timeframe. So
I'm really curious, Chuck, how COVID and the pandemic has affected your business, right? Because we obviously saw every company had to migrate to a at the very least a hybrid work from home for first, and then maybe now a hybrid environment, and the need for tools that enable that, tools like Zoom and Slack and DocuSign and whatever. But obviously, like, what goes with that is the need for more storage. I'm just curious how the pandemic has affected just the growth trajectory of your business.
Because we're a technical company in the way we operate, we're always able to work remotely.
Sure.
But to answer the question directly, when we purchased ABC back in 2016, they were a managed service provider, right to the end user, right to the desktop. So our managed service revenues had a little bit of a pop during that particular period. But we ran programs. It's tough to get an account. Organic growth is very, very difficult in general. And what happens is we went out to the customers and said, if you need to have a delay in your billing, we'll delay it for 3 months. We really didn't lose any customers on the IBM side of things. And so what ended up happening was the 3 or 4 customers that took us up, they paid fully at the end. We didn't lose one customer. In our telecom unit that we have, we lost one customer that was VoIP services and carrier services. But
well, I guess my question was, though, did you see was there an increase in demand? Did the pandemic change that at all? The increase in the need for your offering, or no?
We track the number of sales leads. We do a lot of SEO and inbound lead generation, and that has picked up significantly. I'm not exactly sure whether it's because of Corona and the virus and all, whether that happened, or this migration's taken place because people are very comfortable with putting their Intel services on Microsoft, Google and Amazon. So I'm not exactly sure of that correlation, but frankly, the number of leads and the number of proposals that we have year over year has significantly increased. But we see a big pop when we put out a white paper that says how to migrate your IBM systems to the cloud. There's only a few competitors. So there might be a correlation there, but I think people are getting more comfortable with security in the cloud. And then with that, seeing that they've moved their AWS. Well, first of all, Microsoft and AWS and Google only have 51% of the marketplace. So a lot of other people are doing Intel. We do it, but it's not our core focus. And so I think it's the migrations underway. There's around 1 million of these virtual services throughout the world. And we see a huge uptick, and our average revenue per when they have our services around $3,000 a month. So it's a huge marketplace. And well, I think it has more to do with the migration and getting comfortable with security in the cloud than it does the pandemic.
Can you speak a little bit of all the different services you offer, where exactly, what parts of the business is the growth actually coming from?
I would say infrastructure as a service on the IBM side and disaster recovery are the two mainstays. And on top of that, usually our clients will take multiple services like cybersecurity. But we hired Ed Grossman at a Flagship. We've increased and spent some of that cash on organic growth for folks. And now, hopefully, Ed is trying to cross-sell into that base data analytics and AI.
Can you clarify or elaborate at least on infrastructure as a service, what exactly that means?
Sure. We're moving from on-premise equipment to equipment that's owned by State Data Storage Corporation in one of our data centers that we have cages in, racks in. And they are now retiring their equipment and have moved that to a cloud-based infrastructure. So we handle the infrastructure. They move the applications, which are these custom applications that are running on this, over to us. And they run the applications, we run the infrastructure.
All right. If you have any questions in the chat for Chuck, drop them in there. We do have a few right now, so I'll go there. From T. James is noting that you have $13 million in cash for acquisitions. He's asking if there's any names you're speaking with specifically. I'll ask you that. I doubt you'll tell me, but it's worth an ask. And then also, he would love for you to talk about Microsoft Teams and if you're looking to buy any companies in that field.
Great questions. Okay, so $13 million is not set for acquisitions only. We want to keep some money on the balance sheet.
Okay.
We're spending some money on organic growth, and we will have some money for M&A that we're looking at. The types of companies that we are looking at are in cybersecurity, companies that we're not really looking to necessarily buy a software company, but there are consulting firms out there that have relationships with, as we do, with cybersecurity companies, but they're experts in managing that and implementing it. So that's one type of company that we're looking at. Other is in the data analytics side, and to grow that. You know, our clients, once you have the infrastructure in-house and you're running someone's infrastructure, you now have the ability to offer them the disaster recovery, cybersecurity, and data analytics, and to package that together. On the Teams piece, you know, we're looking at VoIP companies, but we're looking at VoIP companies that have integrated with Teams. You know, Teams went from 17 million users to 250 million users. However, what happens is if you have an attorney or a group of attorneys, just as an application, that has an administrator answering the phone from them, you really can't, at this particular stage, you can't use Teams for that. You need to have Teams integrated with the VoIP platform. So we use Teams extensively. We love it. You know, we have a telecom unit. They have the ability to integrate Teams with the VoIP platform. And we're continually looking at companies that have, you know, the customer base that have integrated with Teams. So we are doing that. I will say also that I've been attending a number of webinars on this. I spent a lot of years in telecommunications, frankly, and it's changed significantly. You know, Teams quality, as you talk at the same time and get clipping, you know, it's not the same level of quality. But we are looking at VoIP companies with Teams. We're looking at cyber. We're looking at data analytics. And we're also looking at managed service providers that have great distribution, good technical teams. That's the types of things that I'm talking to every week, frankly.
All right, Eric Weinstein had a few questions, but Eric, I feel like we've sort of addressed all those questions, so I'm going to skip that. But if you have any follow-ups, just holler at me in the chat. A few questions that we still have to get to. Do you use physical or virtual servers?
Well, we use both. I mean, you know, the physical servers are in the data center. We have first of all, we basically are one of the leaders in this industry, and we're probably one of the creators. We came up with this thing, Hal Schwartz and myself, in 2012, after we bought a company in 2010 that was doing disaster recovery. So we have deployed our assets. We have a customized application for our racks that we put in our cages. But the bottom line is you need a physical server so you can cut it up into virtual servers.
And then what is your storage capacity?
Typically, anytime we're coming near 80%, we add infrastructure. We just added some significant infrastructure to support some of the $15 million in total contract value that we have in sales proposals today. You know, we have everything laid out that once we're at a 90% level, it means we got a verbal approval. At an 80% level, you know, we're negotiating. So we're always trying to stay ahead of that. We do suffer from gross profit margin because we can't take our excess inventory as you know, as inventory. So we have to start depreciating it immediately once it's put in service, even though it's not used yet.
Why not?
Excuse me?
Why not?
I fight that with the auditors all the time. You just can't. Once you buy it, once you put it in the data center, you start depreciating it. But you know, when we price out our subscription, it's usually at around a 50%. When we sell equipment, it's less. That's why we have a blended 44% gross profit margin.
Okay. This is a speculative question. I will ask it anyway from Ashish. Is data storage a potential target for acquisition by IBM? Have at it.
Well, I think right now, you know, we're the little pimple on the elephant, you know. Frankly, are we an acquisition target? We have other plans right now at the level that we are, and someone seems to be shorting our stock continually because we are a significant company and significant in what we do. So we're not ready to be acquired by anybody. We have some other plans on growth. So.
Fair enough. Fair enough. All right. Any more questions for Chuck? Please drop them in the chat. I don't want to miss any. So, but there is a chance I am, because I'm doing 3 things at once. So, I guess, you said not all of the cash, the 13 million, is going to be used for acquisitions. How much of that would you want to save just to have cash?
I'm not exactly sure that answer.
Okay.
I think we have to look at the acquisitions, but we're going to keep a couple of $1 million on our balance sheet. We're not going to go jump and spend a ton of money on organic. We're accelerating our current organic programs. That's what we're doing. We're doing more. Everything was out of cash flow before.
Yeah.
So now we have the cash to actually accelerate organic, and we'll see what happens over the next quarter.
You guys are asking like really like specific questions. I'm more into like the story. You guys are asking like about the cash on the balance sheet and the margins, but hey, that's why we do Q&A. Chuck, can you just tell us a little bit more about like who your customers are? You mentioned, I think, the Atlanta Falcons, but like what industries primarily do you live in?
We live in, I would say, retail, manufacturing, distribution, sports and entertainment, finance, healthcare. Those are the big users of these systems. And, it's all about business continuity, what we do, and it's all about the software. So this software needs to run on these systems. And IBM itself is a cult. So what you end up happening is, once the people that use these IBM systems feel that they get a better return on investment on them, and they're very high processing. And this platform is growing, by the way. Some people say it's shrinking. In fact, the surveys recently showed us a 9% increase. And it's the only platform that IBM has a 10-year outlook on.
But I didn't realize that.
Yeah, the customers themselves are significant. I mentioned a few of them, but there's applications in between it. It's not only deploying CapEx on it. There's also going out to folks that are on-premise that need managed services, managing their software, their hardware maintenance that goes on, that we might have sold equipment to PC Richards, years ago, and they continue to buy equipment. But the point is that they still are getting software renewals and hardware maintenance. We continue to support even on-premise equipment. But when we talk about where we see the growth, it's in data analytics, cybersecurity, infrastructure as a service, and DR.
Is that because once a company, goes down this road, it's so basically impossible, it's such a pain in the butt to change their system?
We have a 94% renewal rate. Okay, and these systems have been in place for a long time, and they keep on being upgraded, and IBM changed the name. Today, they're called IBMi.
Yeah, hey, inertia is a powerful thing, but also, it's not intentional, right? It's not unintentional. These things it's a pain, probably, I would imagine, to really get an entirely new system. So
it's not the system, Spencer. It's the software
and
the applications that are running on this that you can't move somewhere else other than these power systems.
94% renewal rate is something. You don't see that every day. Chuck Piluso is the CEO of Data Storage. Ticker is DTST. And yeah, I see a few more questions in the chat. There are some big names that your customers, the Miami Dolphins, NASCAR, the Atlanta Falcons, to name a few in the sports entertainment field. I guess we'll do one more here because we got a bunch of questions flying at me. How well are you prepared for a DNS attack? That's a good question.
We subscribe to all the services, penetration testing, and it's what we do. I mean, we have a CTO that's really on board with that. It's a continual process. Everything we do is replicated. It's what we do, from high availability to mirroring storage. We're fairly significant. If we have a $500 account, which we do, that means their data is critical, and we'll replicate them to another data center. So it's at 3 points as well. So I think we're prepared on it. But, in listening to the presentation before, you start hearing all the things that are going on. Today, we're protected. Whether quantum computing and all the other stuff comes into place, we'll be on that, and we'll subscribe to those things as well.
All right. There are more questions. I gave you guys plenty of time. I got to wrap. I got to keep going. Chuck Piluso, CEO of Data Storage. Chuck, a pleasure to talk with you today. Have a good rest of your day. Thanks for joining us today on All Access.
Thank you all for joining. Thanks, Spencer.
All right. Hey, we're already almost an hour into this thing. If I could get, where are we on the like front? That's my question. Where are we on the 127? Let's get to 200 in the next 5 seconds. Can we do it? Probably not, but my hopes are high. Let's move on to our next guest. We actually have two guests joining us right now. I'm going to bring them on at the same time. Ingo Mueller and Mauro Panella, the CEO and the CMO, respectively, of AgriFORCE. Let's get them on the show. Here's Ingo. Here's Mauro. Hey, how we doing, guys?
Hello.
Good morning.
Spencer, how are you? Good morning, everyone.
Good morning. Welcome. Interesting that we have you on the show today because actually, sheer coincidence, saw a headline this morning from AgriFORCE. I saw a news item fly by my Benzinga Pro news feed real quick. What was that news item?
We announced a contract for a facility in Barbados to deploy our grow house IP to grow high-value crops for the country for both domestic use and export. So we're quite excited about it because it's a great way to showcase our technology working in what most people would consider difficult environments from a controlled environment agriculture perspective.
Okay, we will come back to that. But first, we'll start with you, Ingo. You're the CEO of the company. Tell us about your background here.
Well, I've sort of been on both sides of the C-suite. One is an advisor to large Fortune 1000 companies related to strategy. Global companies like Daewoo, Genting Group, which many people may not know, but a huge gaming and entertainment concern. And also been a C-suite executive CEO of a number of different companies globally. So.
And Mara?
Yeah, I joined about 3 months ago. I mean, I come from a background of CPGs. I mean, Procter & Gamble, Diageo Spirits, and then in the food business with Lamb Weston Conagra, and most recently as the Chief Growth Officer of McCain Foods. Had basically 30 years of which, 20 in general management, P&L, and really kind of innovation and driving new brands.
Okay, so let's talk about the problem here. What is the problem here that AgriFORCE is working on? The food supply chain. What does that mean? I know that.
Sorry?
The food supply chain. Explain.
Yeah, well, I think everybody, from the onset of COVID, saw grocery store shelves empty, and people started to understand that, production of most of the produce in food in America it comes out of California. And so with COVID, that supply chain disruption brought to light some of the challenges. But more importantly, I think more recently, we're starting to see the effects of climate change on the environment. And in particular, in agriculture, you're seeing fires, you're seeing dust bowls. It's becoming increasingly more difficult to grow things. And consumers generally are now much more aware and demanding of sustainable production and more nutritious food. And then governments, too, are starting to understand that when you look at agriculture, it has the same carbon footprint of all transportation modes combined. It uses about 70% of North America's fresh water. So these are all staggering statistics where politicians are starting to say, wait a second, we have an issue here we need to address. So those three drivers are all influencing our vision of producing more sustainably produced crops and more nutritious foods, plant-based foods.
Yeah, and I've got the graphic up here that sort of outlined everything that you just said. And yeah, this is this is sort of the same idea behind if companies that are doing the fake meat, right? It's like the food supply chain is a massive climate related issue, and we need to figure out a solution for that. So talk a little bit more about what your solutions are.
Well, I'm going to have Mauro sort of talk through our strategy. There's really two sides of it. Mauro, do you mind sort of?
Yeah, there's really two verticals that we drive, both organically and also investing in assets, I mean, midstream assets that really drive some synergy. On the left side, you really see AgriFORCE Solutions that is aimed through our acquisitioning process of a consulting firm in Europe at providing consulting services on ag tech knowledge, operational solutions, as well as through the R&D centers they have to really test, I mean, and drive and the knowledge and the development of new technologies. That allows also that position of this consulting company, which will have, which has in 2021 revenues of $30 million and EBITDA of 3.5, to really be at the forefront of the development in ag tech, both on the horticulture and culture and agriculture side. But importantly, it's also kind of a Trojan horse for us. I mean, in the sense that we really are able to then see really where the next, I mean, platform of ag techs are developing, small companies that potentially develop, I mean, the next killer apps and potentially come into our platforms over time. And we augment the consulting through our facility solution, like the one that we just announced in the Barbados, and we have plans, I mean, also in California and in the future in Massachusetts in the East Coast. That allows us to really drive and augment, I mean, the consulting services through our facilities, and then over time through M&A in the platforms. And that's really driven for the crops. On the right side, you've got the brands, which is really about driving IP on new type of commercial development of products or technologies that deliver superior plant-based foods and specialty ingredients. And one of them is the Manna IP that we just bought, which is a different way, a new natural process to process for grains and pulses that gives you, I mean, flours that are very high in fibers, very high in proteins, and low in carbs. So imagine having basically now your bread and being more keto than you want to be, and actually was a healthy approach. And really that's really what we will drive over the next year to expose it to the market. I mean, you know, both to consumers and the brands, a new company called Untitled Foods, and with products that are in premium consumer flours, as well as really drive an ingredient strategy, a branded ingredient strategy to other manufacturers that really are in food service, or create pancakes and waffle mix, baking mix, snacks, and other pasta and pizza products. The beauty of this process, which again is natural, we don't do anything to the grains except process them and let them awaken, basically, is that we also recuperate the juice. That power juice, as we call it, allows to be applied and integrated into flavored waters, smoothies that have got also, because of its content of proteins and fibers. And also we find out that it has very high properties to speed up the proofing of the dough. So for manufacturers that make bread, pizzas, and so on, instead of waiting 2 to 4 hours or 6 hours sometimes to let the dough rise, it actually can be sped up to about 12 to 15 minutes. So imagine the opening of capacity and other things that they can do, the lower cost that they can have. So we see that itself, I mean, it's just a business in itself.
As a connoisseur of baking shows, speeding up the proving process would be a game changer for them. So, okay, you mentioned this IP that you just acquired a couple months ago, this Manna IP. What exactly is important about that? Because I guess that is what will become Untitled Foods. So explain what you've acquired. Why do we care?
So it's basically been 10 years in the making, and it's interesting because it was so obvious that it was stared in front of us for the past 2,000 years. It's a way to actually drive the berries, the products, the grains, the pulses to actually kind of develop itself before you process, and that allows to actually drive and capture all the nutrients that a wheat berry would have, all the fibers that already exist, all the protein that already exist, and also transform, I mean, the starch into sugars that we recuperate separately. So what we do, I mean, currently in the market is that most of the baking goods are using, I mean, flour, for which a lot of those nutrients are taken out. Our process basically naturally keeps it.
I think a way to look at it is kind of say, you know, when you go, most people go to a restaurant and they look at pasta dishes or they look at the bread at the table, they go, oh, I can't eat too much of that. It's going to make me fat. It's not good for me. So imagine being able to eat as much bread as you want, eat as much pasta as you want. And now, instead of it being a problem, it's actually nutritious and beneficial to your overall diet. It's a game changer from that perspective. And then you think about all the applications in the food system. It's just tremendous. We see it as massively disruptive.
I want to go back to this slide. The formation of the business is very interesting because you got some B2B and you got some B2C and you got some B2B2C even mixed in there as well. So like, what is the breakdown here? Where is most of the business right now?
Well, most of the business currently is on the solution side, but okay, as we develop, we see the brand side, you know, developing an equal critical mass, so to speak. Remember and maybe what we didn't speak to and we should is that everything we do is focused around IP and know-how. We believe that in order to play in the premium high margin space in a commodity business, which is what agriculture and food is to a certain extent, you have to find points of differentiation. You have to find ways you can outcompete the incumbents and do things that are uniquely different and also your own property. So that is our entire focus, both from an IP perspective and a know-how perspective. So we're driving value through the food system, both from the crop side and the production of crops, but then extending that into the ingredient side. So we're capturing the full value from start to finish. And it's really about focusing on those two sides to develop the outcomes that ultimately are good for consumers.
And I would also add that the grow house that we just signed them into building the Barbados is really a core IP that we developed that really allows, I mean, you know, first and foremost to capture through our shell, through our covering, which is a tensile structure, kind of a, you know, transparent Teflon, to capture 99% of the light, I mean, and the spectrum as well as the UV spectrum. And that is the most important element of really driving, I mean, the plant to its maximum development. Most of the greenhouses, I mean, use glass at 70%, lets only 70% of the light spectrum in, or PVC, which is less than 50%. So that's kind of like the real big difference. I mean, that allows us not only to be then a low producers, but actually that our grow houses will provide, I mean, you know, an estimated EBITDA annually of about 12 million plus. And that's, you know, over lifetime, I mean, of a 10, 15 years contract, I mean, you can make the math.
So the consulting side of your business and, you know, the grow houses and all that, I mean, who are your customers? Are we talking like the Monsantos of the world or what?
Well, it really depends on what vertical you're going after.
Okay.
That particular technology is focused on high value crops, so pharma grade crops. So that would allow you to target categories or verticals like plant-based vaccines, nutraceuticals, cannabis, anything that requires very high levels of quality control and or regulations. So that would be the application. We are in the process of applying some of the elements of that IP to more, call it mid-market applications, so food-based applications as well.
Got it. So right now, the growth is from the consulting, the solution side, the B2B side, but what you're really saying is that going forward, you believe that the growth will come from this guy.
Yeah, we are. It will be about 50-50 as we move forward, but there may be more opportunities here. We are currently in the process of finalizing, I mean, the customer work and the R&D. We're readying ourselves for first exposure to market, I mean, in the second half of 2022, and then national launch in 2023 in the US.
And from there, it's just a question of getting getting in front of the brand, right? That would seem to be the biggest.
It's really developing, the bun for McDonald's that can replace their bun and provide more nutrition. I mean, in a burger, I mean, the bun is usually about a third of the calories intake and really kind of empty calories. I mean, so if we can turn it into a nutritional element with fibers and proteins, it's a game changer.
But how do you do this in a cost-effective way? Because maybe let's start back up a second. How do you even sell McDonald's on that idea? If you can tell them it's cheaper, that's one thing. But
well, I mean, there's an element. I mean, if if a product delivers, I mean, really something differentiated, I mean, cost is of course less of an issue. But we're talking about, I mean, smaller impact. The key element is like when they go to plant-based proteins, I mean, they also increase the cost to the consumer about it. They pass on, I mean, that increased cost versus, I mean, a regular burger.
Sure.
So we see that we see that also another way. Consumers, I mean, the millennials and especially the health-conscious boomers, they pay for those products. They want that. They want the nutrition. They want also the taste profile. That it answers, I mean, what they want. They don't want to make compromises.
So you see this basically as more of a generational shift, right? In people being not necessarily caring to pay the extra quarter if it means they're getting, a bun that is maybe not just better for them, but also it was more grown in a sustainable way.
Yes, I mean, most of them are already looking for alternative products. They're buying keto flours, they're keto products. I mean, higher fiber products. They do that. However, they have to compromise on taste. The products that they taste are not as good as the regular one. I mean, but if we can develop a sandwich or a bread that tastes the same, but actually provides the same benefits, I mean, as very high nutritious products, then that's a game changer.
Are we talking just the U.S. here, or is
no? We see that. I mean, globally, but of course, I mean, we will have to drive that with partners.
Right. Well, I mean, obviously, you talked about Barbados, but I guess I was talking more about like other plans to get into the European market and the Asian market, the Africa, Middle East.
So we see that, I mean, probably in 24, 25. Once we establish the brand and the business, I mean, in the market like the U.S., then expand, I mean, in other parts.
Voodoo is asking a question in the chat that I was also thinking about a few minutes ago. I've got people in my family who have or are gluten-free, gluten intolerant. How does this fit into that?
So, when you look at wheat, I mean, the product can be done also with oats, other grains that have got less gluten. I mean, at the moment, we decided to focus on wheat first because it's the biggest market. And yes, there is a demand for gluten-free products, but it's actually a small percentage of the market. I mean, for those consumers that look for high nutritious, it's less than 10-15% of those consumers. But over time, I mean, you can develop and drive the process to take some of the gluten out or work, I mean, with gluten-free grains. I mean, it really works on all types of grain, from ancient grains to modern ones, as well as pulses also.
And I think, what we have to consider here is when you look at dietary staples, wheat-based products are a huge component of every person's diet. And, we've had discussions, for example, in Barbados, where we've been speaking to the government about the healthcare costs related to obesity, diabetes. And when you talk to them about this technology and what it might do to change that whole nutritional profile within the society as a whole, they understand the disruptive nature and value of that, because the medical costs associated with diabetes and obesity and other health challenges related to diet are enormous. I mean, in a small country like Barbados, they're spending hundreds of millions of dollars a year dealing with those issues. So we see a tremendous opportunities over time to prove out the medical benefits. We're working with a medical foundation to do that. So there's all sorts of benefits beyond sort of the more traditional view of, oh, it's good for me and I can eat bread now.
Got it. All right, Ingo Mueller, sorry, the CEO, and Mauro Pinella, the CMO of AgriFORCE, ticker AGRI. Guys, thank you so much for coming on All Access today. I learned a ton, and keep doing what you're doing.
Thank you very much. Have a great rest of the day.
You too, Mauro. Thank you, Ingo. Thank you, Mauro. All right, let's bring on our next guest here. Guys, I was not lying when I said we had interesting companies on the show today. We've gone from like biometric data, right, to data storage, to a company like redefining how wheat is made, right? This next company was probably one of the more interesting ones to learn about as I was preparing for today. Talking about helium. More specifically, a global helium shortage. I had no idea, and we're going to find out all the things that we use helium for. My next guest, Chris Bakker, is the CEO of Avanti Energy. Let's bring Chris on the show right now. There he is. Chris, welcome to All Access.
Hey, good morning.
Okay, so as I said, I was pretty ignorant of helium and all its uses. We'll get to all that. First, though, tell us about your background, how you ended up as the CEO of Avanti Energy.
Sure. Most recently, I was working in oil and gas. I'm based out of Calgary, and our team is based out of Calgary here, which is sort of Canada's oil and gas headquarters. Mm-hmm. I worked most recently in the commercial world, where we would build large gas plants for our production by using third-party money and third-party ownership and our construction and our operatorship. So fairly complex deals. We did about a billion cubic feet of gas processing per day in construction there. Prior to that, I was in the land world for oil and gas. And prior to that, when I was young and had hair, I was an economist.
Oh, okay. So, then this is right up your alley. So, explain then to us, what is the deal here? There is a global shortage of helium. Why? What's that about?
Yeah, maybe we'll start with the use cases first, and then we'll talk about the shortage.
Okay, sure.
The use cases, everybody thinks balloons, and I understand that. And at one point, that was my exposure as well. But helium itself is it's got some unique characteristics. It becomes gaseous at the lowest temperature possible. It's just above absolute zero, so minus 272 Celsius. So if you want to cool something incredibly, helium's the product to use. It's inert, it's safe, it doesn't explode, it doesn't bind with other chemicals, and it's really, really small. And so it's actually one of its advantages is that it leaks out of everything. So if you're doing leak detection or purging of industrial equipment, it's an excellent product for that. The demand side of things, I think what people need to understand is that it touches their lives daily. The biggest use for helium is in MRI machines. So healthcare is obviously an important part of everybody's lives. But the high-tech side is really where the growth has been lately. And so semiconductor manufacturing, fiber optic manufacturing, they all require helium. Nuclear facilities use it to test their facilities when they do a turnaround. They've done work on it to make sure that they're safe. And with that cold temperature that I mentioned, there's some really interesting electronic things that happen at those ultra cold temperatures. So supercomputing, those computers need liquid helium to operate in those strange ways that they do. And so it's really kind of fascinating that way.
I was also reading space.
Yes, absolutely. NASA's the biggest buyer of helium, biggest single buyer. And so we're quite excited by, the private sector development in rocketry. And, the story that we've heard is that it takes about $12 million worth of helium to launch a rocket for, one of these companies like SpaceX or something like that. So, it's a critical element for a lot of the high tech and a lot of the interesting things that we're seeing going forward. And
so historically, where do we get our helium from, or where does NASA get its helium from?
Yeah, historically, it's been a byproduct of natural gas in most cases. There's a major field in the mid-continent of the U.S., kind of Texas Panhandle, Oklahoma, Kansas, and you know, the primary driver of that field was to explore for and develop natural gas. And there was a little bit of helium in there. And in aggregate, it was enough to keep a facility, you know, keep a number of facilities running. But, you know, over the course of 70 odd years, that field's in decline. And what has happened with that, well, and actually that field had, at the end of it, the U.S. had a strategic helium reserve where they supplied 20% of the market through that facility, and that facility is closing. So that's been a major development, I guess, in the industry.
Why? I guess why exactly is that just a natural byproduct of time? And
why is it accumulated there? Yeah, so the helium, it's actually it occurs from the decay of uranium and thorium that's deep in the earth. And as it decays, that's one of the byproducts that comes off it. And being very small and very light, it wants to work its way up through the earth and eventually to atmosphere and head off into space. And what happens is much like natural gas, if you find areas where there is a sealing layer of rock, so rock that's very, very difficult for helium to pass through, it'll accumulate in the high points. And so very much like a balloon wants to rise, all those molecules in the balloon wants to rise. The individual molecules under Earth and the Earth want to rise and
got it. So this area in Texas that is you know, as reading is mostly exhausted, right? And that brings us to you. That brings us to
exactly
to what you're doing. So how do you find more helium?
Yeah. So we had a price signal in 2018, 2019 that, you know, encouraged pure play helium producers. And so that's where we are. It's explored for very similar to natural gas, but obviously the locations are different. But what we're doing is trying to focus on nitrogen associated helium. So we don't have natural gas to deal with. There's no greenhouse gas side of it. It's a little cheaper on the processing side. And so it's very similar to natural gas. And for those for the listeners and watchers who understand natural gas, it's probably similar to natural gas 20 years ago. So pre-shale revolution, where, you know, in the shale revolution, they drill these long horizontals, they have to frack, and it costs an awful lot of money. Our exploration targets are kind of old school conventional things. You just drill a vertical well in there. There's not a lot of completions and fracking required. It's fairly, you know, relatively speaking, it's low capital compared to natural gas. And so that plus the green side of it, we're pretty excited about where we're headed.
So where are you looking for it?
Well, our first property that we've accumulated or acquired is on the Alberta-Montana border. So we're about 69,000 acres there, largely contiguous acres. And we've identified 10 structures there. So if you kind of, kind of north central Montana, right up against Alberta.
Is that what this is, the Greater Napan?
Yes, okay. Exactly. That's our first property that we've identified. We've got a few more in the pipeline. We want to build a full portfolio of properties, but this first one is 69,000 acres. It's got stacked pay, which means that there are multiple opportunities per well for a productive zone. So, you know, we see that as a particularly strong de-risking opportunity for us. And so you can see in that diagram there on the left, in that cartoon on the left, you can kind of see how the helium, which is the light green, would accumulate underneath these structures. And in that diagram, it kind of demonstrates that there's, you know, 2 and 3 opportunities to win.
How crowded is the space? How many people are out there doing what you're doing, looking for helium?
You know, there's more coming. There's really only been a couple long-term players that are pure play, and then just in the last year, there's been more coming to market, and it's a mix. You know, there's I think with the price signals and the interest in the industry, there's certain companies that are coming in and just acquiring land and trying to be a land play. And then there are companies like ours that are actually trying to be producing companies and go forward that way.
So tell us about the interest in the industry. How because I was reading about the Helium Stewardship Act of 2013, which I guess expired like a couple months ago.
Yes.
So like, has interest increased, spiked? What's going on that front?
Yeah, absolutely. You know, there's a couple things. I mean, the supply demand picture is a global one. So that's the first thing to understand, is that you know, demand is growing globally. But the one thing I always like to point out to people is that aside from you know, this half a dozen group of explorers like us, the other changes in supply are from countries that maybe geopolitically aren't top of the shelf of where we'd want to do business with. So it's you know, Russia, Qatar, and Algeria are where the additional supplies are coming from today. And so, you know, when we look at supply chain risk, that everybody's been acutely aware of in the last 18 months here. You know, we see this continuing to be a very strong regional market with less, you know, perhaps less reliance on countries that are unfriendly to us.
Here's a good question. I usually like to wait a little bit later, but Carla's got a good question from the chat. What about finding helium in space? Can we find helium in space? Is that a thing? Do we know?
Well, it's hugely abundant, but it's very low density. So it's kind of, it's about density, right, and accumulation. You know, helium is the most abundant element in the universe, but you know, aside from stars, it's not really capturable. It's much like the atmosphere. It's in the atmosphere, but it's at such low density that it's not worth going after.
Well, what can you tell us about the historical pricing of helium? Obviously, you know, you just spoke about the demand side growing, supply side maybe is where the problem is. But what can you tell us about just the way that helium is priced historically?
Yeah, it's you know, the first thing to know is that it's one of the differences between natural gas and helium is that there's no major exchange for price discovery.
Yeah.
And so that storage facility that we talked about earlier, that's been, you know, historically one of the few public places where we can find public data on pricing. So that price jump that I mentioned, you know, from the, you know, say 2000 to 2015, 16, 17, it was worth about $100 per 1,000 cubic feet. And then in that 18-19 era, it jumped to 280. And so pretty significant jump. And from everybody I've talked to, that seems to be about the floor price these days. You know, we kind of hear through the grapevine of what pricing is, and we can infer from certain public data that's come out of what pricing is. And you know, I've heard recently of deals that are 365 is the inferred price. And then there was a shipment out of Russia that I heard was in the 450, 460 range as well. So pretty dramatic. You know, our expectations once we get our facilities built and go through our funding model there are that our capital and operational costs are going to be about 150. So anything above 150 is profit. And if we're starting to talk about 350 and 450 on the sales side, that's pretty significant.
Okay, so let's look ahead here a little bit, right? You've got this land. You're looking for helium. What is the status of the project right now? And when will you know more?
Yeah, well, we're right on the cusp of our drilling program, so this is a great time to be talking with you. We literally got our drilling permits yesterday from the state of Montana. So we're mobilizing construction crews tomorrow, or today actually, and we should have a rig out there roughly in about 2 weeks, and that'll be the start of our drilling program. So we're going to do an initial 3 wells and start seeing results from those. And then, you know, my goal would be to keep a rig busy all through next year, and you know, be in that 10 plus, maybe 15, maybe even 20 well range next year. To continue to develop that field and explore that field. So, you know, the wells are fairly simple, as I mentioned. And so, you know, it'll be tight, but we should see preliminary results by the end of the year. And then we have to do a 30-day test after that. So detailed results would be in the February range. But, you know, in terms of value creation, this is the fun time.
We got a few questions in the chat. Carla, I guess we kind of already answered this one. Maybe it's subjective. She's asking about the most important application for helium. I guess it depends on who you are. That, you know, Chris, I don't know if you want to answer that, but they're found in semis, they're found in MRI machines.
Yeah, those are definitely the growth areas. MRIs are the biggest slice of the pie in terms of demand, and so they use 800 to 1100 liters of helium, and then it leaks out because it's such a small thing, so it needs to be replenished on a regular basis.
Sure.
There's a lot of other industrial uses like welding and manufacturing of other things like that. It's great in a situation where if you were wanting to, leak test, of course, but if you want to preferentially do something in a vacuum, helium's a great substitute for a vacuum. So you can purge the environment out of it, and then eventually the helium will leak out of the container that it was in as well. And so you kind of get a replication of a vacuum that way.
A question from Voodoo. Any plans to uplist in the future?
We're exploring it seriously. That's what I'll say. So
okay,
serious exploration there.
All right then. And then I sort of mentioned earlier this thing I was reading about that the Helium Stewardship Act. I guess as part of that, the Bureau of Land Management was required to auction off all the remaining reserves. What does that mean, and did that happen?
My understanding is that it did happen. And so that's been, what it's really meant, as far as my understanding is that, most of the supply contracts are one-to-one supply contracts for longer terms, let's say. But what that did for the industry, having that sort of backup of the Bureau of Land Management's facility, it kind of became an upward price cushion. So if people didn't like the prices they could get, from a private producer, they could always run to that auction and buy something. And so with that out of the way, I guess from my perspective, it's a good thing. I think there's volatility to the upside, I would say, for the pricing.
AP with a good one here. How do you intend to capture new customers if the customers already have a contract with another supplier?
Yeah, so the market is there's two steps to it. I guess there's a wholesale market and a retail market. The wholesalers, they have their own, they chase their own demand, I guess, and chase their own retail places there. But, the contracts that they have will roll off over time. Supplies diminish over time. The contracts roll off over time. And, that's our opportunity to get in and negotiate with them as well. So it's a fairly dynamic market. There's good interest in what we're doing. We've talked to all the majors, and basically we're waiting on results, and then early in the new year we can start having serious discussions with them.
Awesome. Yeah, I mean, Chris Bakker, the CEO of Avanti Energy, the ticker's on the screen, ARGYF. And so you've got the project in Alberta, right? Are there other plans? Sorry, Montana. You're right.
Yeah, both. You're right.
Okay. Yeah, right. The border there. Are there other projects you maybe not planned, but I thought about? Like, I think there's 30 sort of places on Earth where helium can be found, right? So
yeah, we're continuing. We've got a pipeline program here of opportunities that we're building, and so there's another major project that we're at the final stages of due diligence on, and that hopefully will be announced in the next couple of weeks. And then there's a number of other projects that we're exploring at the time. So my goal is to have 5 to 7 equivalents of this greater nappin, and build out a very long-term inventory of supply.
Hey, I think the biggest takeaway here is if you haven't thought about the helium market, you should, because apparently it's mission critical to a lot of things that I didn't realize before I was doing my homework. I like you, Chris, like everyone in the chat, like everyone watching this, I'm sure you all just assumed kids' birthday party balloons, but not so fast. There's more to helium than that. I guess the one thing we're missing, Chris, is a helium futures market to get really transparent pricing. But maybe one day.
Maybe someday. I'd love to be the swing producer and set the market when the time comes. So,
how did you? Maybe I don't know if I got this one real fast. How did you even end up like, how did helium even come on your radar? Like how does a person,
you know, well, actually my first
interested
exposure to it was
helium?
when I was in oil and gas, and we had a property that had a little bit of helium in it.
Yeah.
And we were looking at marketing that, and it just became a point of discussion. That was about 2015, I think. And at the time it wasn't rich enough, and the pricing wasn't enough there to really make a play. But that was kind of the first time it got on my radar.
Huh.
And then, you know, there's been a fair bit of volatility in oil and gas, and particularly in Calgary. And so, you know, our core group, you know, the core group that we started with, we all worked together at the same company. And we accepted packages from that company when there were some layoffs. And, you know, that freed us up to pursue this opportunity, which, you know, it's a redeployment of the same skills that we had in oil and gas, just in a brand new field. So it's been a lot of fun.
Awesome. Chris, thank you so much for going on All Access today. Good luck with the project. Thanks
so much. Great to be here.
All right. Let's bring on our next guest. Actually, we have a pair of them joining us next year on the show. But before I bring them on, I have to do my hourly grovel. You guys know how I do by now. My grovel for likes, where we at? 178. Okay, we're knocking on the door. I see resistance at 200. I see it. Can we break through resistance at 200? I think we can. You can help me get there. Okay, let's pivot away from helium and all the cool things that can do that we all just learned about, and move on to a much more serious discussion of addiction. Okay, you guys know this. I know this. Addiction, a major issue right now in America, an epidemic. Frankly, this next company is trying their hand at trying to solve for that, basically trying to help people improve their lives who are fighting addiction. The company is called BioCorRx. The CEO is Lourdes Felix. The president is Brady Granier. I'm going to bring him on right now and have him tell us about this company. Again, interesting, but also, if you're sensing a theme here today, it's interesting and yet also important, right? Companies doing important things. Not that there's anything wrong with, a balloon maker company, but these are companies that are tackling real problems. So, Brady, good morning. Lourdes, good morning. How are we doing today?
Good.
Wait, Lourdes, you're on mute. Can we check your microphone here? Let's make sure we got you. Brady, I hear you loud and clear. So, Brady, we'll start with you, and Lourdes, check your microphone settings on your computer or in the StreamYard link. You sounded great yesterday when we spoke. Brady, tell us a little bit about your background.
Well, my background, I have two careers kind of blended in one here. I started out as a registered nurse out of college, and I worked in ICU, ER, CCU, all the critical care settings. Did that for a number of years, and then got out of the healthcare industry and went into media somehow. Got into media, mostly in the radio business, radio and digital. And I was always the healthcare guy there, but it was sales and then management. And I worked for iHeart, which is now iHeart Media. I managed some radio stations. So I had, a biz dev background there and sales background. And then several years ago, came across the opportunity of BioCorRx, which was called something else back then. It kind of blended my healthcare background with my business background, and now here I am.
Well, Lourdes, do we have you?
I think so. Can you hear me?
Yes.
Fantastic.
Excellent.
Right.
All right. You are your CEO and also the founder, right?
I am the CEO of BioCorRx Inc. I'm one of the founders of our subsidiary, as is Brady, BioCorRx Pharmaceuticals. So
I'm curious. Yeah, just tell us about you, because this is a heavy topic.
It is. It is.
So what happened in your life, in your career that made you think I need to start working on a solution or a drug here to help people who have addiction?
Yeah, I met this company about a decade ago, about 10 years ago. So I've been with the company just over 9 years.
Yeah.
And when I first heard about this company, They were a management company that were managing a very small medical practice out of Santa Ana, California, single practice. And, at my former position in an audit firm in Orange County, California, came across this company who had just become a publicly traded company. And as I dug in deeper, I just found it really unique that there was this really small medical practice that was out there helping individuals struggling with addiction, and it was working. These individuals were going into recovery, 12 months, 18 months, and I just thought, why hasn't the rest of America heard about this company, this program? And I immediately got involved. I had always seen myself trying to get involved with a company that gives back to society to help individuals struggling with any form of addiction. So I think, it was the perfect place for me at the right time. And I was able to get involved, and shortly thereafter met Brady. So Brady and I have been working now together for the past decade. So we've been working side by side now, combating addiction, and also, setting a footprint out there with our company, with the programs that we have developed, and also our subsidiary now, and having the pipeline that we have.
Are we talking all kinds of addiction here, or specifically alcohol and opioids? What?
It's drug addiction, alcoholism, and now weight loss as well. Okay.
So what exactly are you working on here? I know you've got a drug in the pipeline.
Brady?
Yeah. So right now we are in development of a drug called BICX 104. That's the name of it now. That won't be the name in the future, but it's BICX 104. And what that is a naltrexone pellet that's subcutaneously implanted in your fat tissue. And now it's made of naltrexone. So it's a pellet of a drug, naltrexone, which has been around for decades. It's been approved several times in different forms and deliveries by the FDA for alcohol and opioid use disorders, and in combination with other drugs for weight loss. So naltrexone's been around for a long time. But now what we're working on is the different delivery of it. So what naltrexone does, it actually blocks the same receptors in the brain that the opioids attach to give you that euphoria and unfortunately cause some overdoses. So it competes for those same receptors in the brain. And if you have enough of that in your system, it will block those opioids when they do come in from engaging and causing those negative effects. And it can also reduce cravings for alcohol. It doesn't stop anyone from getting drunk, but it can stop them from wanting to drink. And if they do drink, they won't get that buzz that they're craving. So that's kind of how naltrexone works.
Okay.
It just doesn't give any pleasure, and it blocks craving. So the problem with it is most people just don't want to take it long enough for long-term recovery, because it's every day when the naltrexone wears off. Let's say they're taking the oral form, they may have cravings again, and sometimes that substance of choice or trigger may happen in life and cause them to relapse, and they just didn't have enough time. So compliance is an issue. So this drug is designed to be subcutaneously implanted and last for weeks and months. That way it's in them, and it gives them a better chance of long-term sobriety to deal with the underlying issues with their addiction.
So naltrexone, obviously, like I said, been out there. Is it out there right now in other forms?
Yeah.
If not,
several forms. There's a pill form.
Okay.
It's been out for decades. There's a shot form. It's been out for over a decade now.
So what's so special about the subcutaneous? Is that just the fact that you don't have to take it? It gets rid of the psychology aspect?
Well, it's the choice, the compliance.
Yeah.
I mean, even with oral, especially with oral, the injectable form is actually, is better than the oral, depending on what the patient needs it for. I mean, there's other reasons people need oral naltrexone for shorter periods of time. So they all have a utility. But our product is designed for those that just have that struggle with staying compliant. And this gives them, instead of, a day at a time or a month at a time, BICX 104 is being developed to be 3 months at a time. And 3 months is very significant in recovery because it's 90 days. And a lot of things happen in 90 days if someone's sober with medication or not medication. Their brain starts to heal and rewire itself. So it's a very important milestone to keep someone, drug-free for 3 months. And therefore, longer than that after that.
Sure, time is of the essence. So where are we now in the pipeline in the approval process?
Well, we just received our IND this earlier this year after doing years of preclinical studies on BICX 104. We had the IND, and we just received the second another tranche of funding from NIH and NIDA for the project. So we've been funded for the most part by the government on this project. So now we're okay to go into human studies with BICX 104, and right now we're preparing that with selection of the clinical trial site and gearing up manufacturing for the clinical product that has to be made and up to specifications for human trials. So that's all in the works now. So we're scheduling that. So we hoped we were hopeful to get it done before the end of the year, but now the holidays are getting up too close to us. So it's and you have to recruit patients into it, the volunteers into it. So after the holidays, hopefully we can get this thing, this clinical trial started and go from there.
So you've gotten some funding from the federal government, like you said. What kind of partnerships do you have right now in terms of? I read about you're working with someone in Cleveland, I believe. What are your partnerships right now?
Well, the partnership on this project is with Recro, which is a company in San Diego. They're the manufacturer for BICX 104. So that's our manufacturing partner. We announced that a few months ago that they were going to be the the manufacturing and hopefully they'll be the commercialization partner too once that's approved. So and we don't have, that's the main partner right now in the project that we have for that. Of course, we're partner with the government on doing these, and we'll have some more partnerships as we get close to commercialization. The Cleveland thing you're talking about, I think Lourdes can maybe speak to that, but I think that's using on the other side of our, not the pharmaceutical company, that's our behavioral program, our different program that we have.
It's the operational side of our business where we have developed and introduced the beat addiction recovery program that we've had out there now for about a decade. So we partner with doctors and treatment facilities throughout the country. And most recently, we have been making headway in Ohio with different treatment facilities and partners there. So I believe that's what you're referring to. So, I think it's important to mention that obviously the medication works very, very well for substance use disorder, but we also are a huge advocate for the entire wraparound services, which include peer support and also behavioral therapy, CBT specifically. So, we look at it as a continuum of care. Sure, the medication works, it works extremely well, but we also want to make sure that individuals have access to peer support specialists that know exactly what they're going through, and also CBT modules that they can work through with their clinicians to make sure to address any triggers for these individuals.
Yeah, I guess I was going to say it works. It sounds like it works more like a, what's the word? Not quite a flywheel, a holistic approach, right? Where you've got the drug, the medical treatment, but you've got all the other stuff to go with it, right?
Absolutely.
Yeah.
Absolutely.
We got a couple good questions here from the chat. Dylan Carson has a good one here. He's asking, first he says that drugs like this, I'll bring it up on the screen. Drugs like this are amazing and help so many people. What is this compared to Suboxone? Hope I got that right.
Okay. Well, Suboxone is a brand name of a drug, as buprenorphine. So buprenorphine is the generic drug, and Suboxone is a combination of buprenorphine with, I think it's naloxone. But that's the brand. So buprenorphine, it falls under that umbrella. So in the field of medication-assisted treatment, there's like 3 main drugs that are used. It's methadone, buprenorphine, which covers Suboxone, and then there's naltrexone, the space we play in, and all the different types of versions and forms of that. Yeah. So buprenorphine is different. It's a partial agonist, where naltrexone is an opiate antagonist. So the buprenorphine competes for the same receptors. It does engage with the same receptors as opioids do. It does, it has some sort of effect. So you get some effect from it, but it does help with the withdrawal symptoms, and it works long term. But it's really a different mechanism. It engages with the same receptor, but it's a different kind of mechanism of action in what it does. And that's primarily for opioids, of course, but naltrexone can be used for opioids and alcohol, et cetera.
What kind of side effects are we talking about here?
Which one? Naltrexone?
No. For BICX 104.
Oh, well, naltrexone, side effects for naltrexone, you can look up those, but most people, it's like GI complaints for the most part when it comes to naltrexone, especially in the oral form, you'll see that. So you have those general kind of complaints. I don't know the whole list, it's a whole laundry list of them now, but with BICX 104, what we're looking for in clinical trials is not, the systemic effects of naltrexone are widely known. What we're studying is what's the local effects from having the different delivery of it in the subcutaneous fat area. So that's what we have to look at, and also the blood levels of how long it actually lasts. So, but the side effects are, mostly, like I said before, a lot of GI stuff. With the other forms of them that kind of seem to self-regulate themselves over time. But anyone can look up the side effects of naltrexone. It's widely available.
Here's one from Carla. Do you know if, I guess maybe you would, or I don't know, does the drug block only the drug addiction receptor, or would it block other receptors as well?
It's a good question. I mean, from my knowledge, the receptors that it blocks is the mu opioid receptor. Full agonist at that receptor site. If it has other receptor engagement, I'm not keen on that of any significance, but it's a mu opioid receptor, so it 100% blocks those mu opioid receptors, which are target receptors for opioids. But naltrexone, I mean, again, I encourage people to actually look up naltrexone in general. I mean, people are using it in low dose forms for treatment of pain and all sorts of things. I mean, people will regard it as a very relatively safe drug, maybe safer than a lot of things in your medicine cabinet, and it's been around for a long time. But there's a lot of people doing some interesting research with that ingredient, not just us. I mean, there's other things that are happening in that space. I encourage a lot of people to look it up.
We talked about the government funding. What has the government told you with regards to your research? Obviously, they've given you money, which is an endorsement. But what have they told you?
Well, I mean, this is a very important project for them. This grant came about a few years ago. I think it was $1 billion in funding thrown towards the opioid crisis several years ago, and NIDA. NIDA, which is the equivalent, which is under NIH, National Institute of Health. NIDA is the equivalent of they all have their subdivisions depending on the disease, but NIDA is what we work with as the National Institute on Drug Abuse. They've publicly stated that there's a need for development of longer term antagonists. Well, that's what BICX 104 falls under. So there's a need for it. They've voiced that need for products like this because they feel it's a missing, having a longer term opiate antagonist product is missing from the market. Right now we have the 1 month and the one daily dose, and this longer term ones are needed. So they've voiced that. So it's a very important project for them. Of course, we have to hit our first milestone with them and that was to get our IND, and that was to prove safety in the preclinical studies, which we did over the last 2 or 3 years. So that unlocked. So we hit our milestone, so they gave us more funding this year because we've been hitting our milestones. So they're encouraged by the project to date.
Awesome. And Lourdes, do you have any thought here? Lourdes, do you have any thoughts on anything that Brady just said, or is there anything else you think the public should know? The timeline we discussed, I think April, right? Is when you should have something to share with the public. But is there anything else we need to know? Just, if not even just about the drug itself, but just
I think, and I mean, right now with the opioid crisis and even alcoholism, that is not really, there's not a huge focus on, but is also a huge problem. Our drug development team and our R&D team, obviously Brady heading that effort up. It's really important to note that with drug development, it normally takes a large number of years to get to where we are right now. And we have realistically gotten up to human trials where we are now relatively quickly. The grant that we received from the government was 2 years ago. We're heading into year number 3. We're hopeful, and we estimate that we will be through the human trials in the next 18 months tops, and that's what we're estimating. So that's relatively very, very quick to bring a new drug to market, but that's what we're looking at. And again, you know, we have a lot of support from NIDA and the government. This is very important to them. So, you know, I think that is a huge takeaway for our audience, is that, you know, given the timeline that we've been given, all the progress that we've had, we've come very far in a very short matter of time.
And just to clarify, when I said April, I was referring to this past April when you got the IND from, or you applied for the IND from the FDA. Lourdes, Felix, Brady, Granier, the CEO and the president, respectively, of BioCorRx, ticker BICX. A pleasure to talk to you both, and all I can say is genuinely good luck, and we are rooting for you because you're helping society. So,
thank you so much.
Thank you for coming on today. Appreciate it. All right, let's keep it going here, guys. This next company is actually near and dear to my heart. Let me tell you a little bit about my background. So, my dad is a corporate information security officer, also known as a CISO, right? CISO. And my entire life with computers has been security, right? Like the very first thing I learned to do on a computer was create a password for myself, right? So that no one could like hack me, whatever I had as a 8-year-old on our computer. But this next company is in that vein. It's called Tego, or actually Tego Cyber. The CEO and the CFO are about to join us here, Shannon Wilkinson, and Shannon also is in this space, and she has a background in IT. She worked at the UN for a while, and then pivoted to tech and to cybersecurity. And we're going to talk all about cybersecurity, cyber attacks, cyber infrastructure. Let's bring on Shannon Wilkinson right now, the CEO of Tego Cyber. Shannon, welcome to the show.
Hi, Spencer. Thanks for having me.
So I sort of teased your background a little bit there, but as I said, you spent some time at the UN. I guess you did IT for them. Tell us about that, and then what prompted you to say goodbye to that and move into cybersecurity, starting your own company.
Yeah, so I guess I would say I was fortunate. When I was getting ready to graduate the University of Nevada, Las Vegas with my bachelor's in information systems management, the UN wanted to build a recruitment system for the peacekeeping missions because it was taking them more than a year to get boots on the ground for peacekeeping missions. So unfortunately, the headquarters in New York didn't have the budget, but peacekeeping missions always did. So the UN dropped a team of 30 developers and QA analysts and everything in the Kosovo peacekeeping mission. And I spent 12 years over there as a software developer, moving up kind of through the ranks from being a software developer into managing development teams and such. It was actually in the peacekeeping mission that I met my husband, Troy Wilkinson, who was seconded through the U.S. State Department to the United Nations and European Union to help train police officers in Kosovo on IT forensics, because he was a forensic investigator. So if you think about like child pornography, bank fraud, those type of online criminal activities, that's what he was investigating. While we were there, we started our family. So when I was pregnant with our second daughter, we actually decided maybe peacekeeping missions weren't the best place for us to raise our family. So we decided to move back home to the U.S. and settled in Vegas, where, of course, I graduated university, worked for various different private sector companies, both law firms as well as e-health companies and such. But in 2015, Troy and I really saw a need for cybersecurity solutions for small to medium businesses. So we co-founded a company called Axiom Cyber Solutions in 2015 that was focused on kind of automated cybersecurity, a firewall replacement for small to medium businesses.
Okay.
What we found in that time is that it took a lot of education and a lot of convincing small to medium businesses that they actually needed cybersecurity. So I'm sure your dad can relate to this.
Wait, no, I can speak to that like from personal experience. and you know what he would always lament is that cybersecurity is a reactive thing, not a proactive thing. Nobody cares about it until they need it.
Yeah, if you
yeah,
think
like
about that,
yesterday,
the
right?
meme, there's the meme about cybersecurity budgets and everything like that, where it's like, before a data breach, the guy is squeezing the pennies, and then after the data breach, the executives are making it rain, So
Yeah,
it's
yeah,
very, very much reactive,
yeah.
unfortunately. And so Troy and I actually exited Axiom. We sold it to private equity in 2019, but I enjoyed the entrepreneurial journey so much that I kind of told Troy, I'm like, what do we know about cybersecurity? What gaps do we see in cybersecurity that we can fill through our knowledge and our connections within the industry and everything? So we decided to we co-founded another cybersecurity company, Tego, in September of 2019, focused on enterprise solutions. We found with Axiom, hardware was difficult, as well as the education for small to medium businesses. So we said, let's go totally software as a service. Let's focus on enterprises who are investing heavily in cybersecurity. And what we developed with Tego is a threat intelligence platform that ties into the existing softwares that enterprises are already using for security.
All right, that's a big word there. Threat intelligence.
Yes.
Explain, what is threat intelligence?
So if you think about threat intelligence, it's kind of the who, what, when, where, how of cybersecurity. It's all the data, all the bad IP addresses, all the bad URLs or websites that might go out there, all the people that are sending you phishing emails, the ransomware actors, all of that information. And there are tons of lists out there on the internet. You could pay for them and everything that have all these lists of bad IPs, bad URLs and everything, but they're disparate. They're spread out all over the place. Some will just be a list of IP addresses. I would classify that as threat data. Threat intelligence is that we're compiling all that information and we're adding context to turn that threat data into threat intelligence. So to basically give a security operations team the information that they need at their fingertips to make a quick informed decision. I try not to geek out too much on that, but if you think about it, if you get flagged, an IP address, you want to know why the IP address is bad, right? You want to know, is this a ransomware actor or is this a phishing email? Do I need to, if you're a security analyst, do you need to spin up incident response? Those type of things. That's what threat intelligence allows a security operations team to decide. Got
it. So it's like one level deeper, basically. So okay, so what your platform, your software integrates on top of these softwares or within these softwares that are already out there. In doing some research, you talked about the integration with Splunk, one of the larger, one of the larger, more well-known cybersecurity companies out there. So is that the main integration right now, or is that just like the biggest use case? Like if you're a CTO or a CISO and you're looking for to integrate this, is that like you need to have Splunk, or is that just one use case? Yes. So for right now, we do have our integration with Splunk available on Splunk Base, which is the app store for Splunk customers. But we've built our technology with the fundamental threat intelligence platform behind everything that we do. So we're creating additional integration. So there's also, I think we released some news that we're working on an integration for Elastic SIM. And SIM platforms, basically system information event monitoring platforms, which is Splunk, ElasticSIM, Devo, Logarithm, Datadog. There's about 25 different SIM platforms out there. And what those SIM platforms are is they're giant data warehouses. So if you think about your computers, firewalls, switches, they're all generating logs. Yeah. All of that data goes into the SIM platform. So it's a perfect place to integrate threat intelligence to, because we can take all that data that's coming from the computers and everything, compare it to the threat intelligence that we have with Tego, and then find the matches for the customers so that we could say, hey, we've detected, these 10 computers talking to these malicious IP addresses or URLs or phishing domains and such. And then, hey, you need to go take a look. So how exactly are you doing that though?
So we're building integrations, building plugins for the different SIM platforms. It takes us about 3 or 4 months to develop an integration, depending on the documentation of the SIM platform. Splunk had a very well-established developer program where they actually encourage development of value-added apps for their platform. Elastic also has great documentation, so we're able to essentially create an integration very quickly. And basically what our platform does is that we send all of our threat data to the customer environment, and then we're building dashboards to help visualize, as well as like help surface up those matches that I talked about, of like we're comparing all the data in the customer environment to our threat intelligence platform within the customer environment. So we're not taking it out, or not asking the customers to send us their data or anything like that. It's all encompassed within the customer's environment.
Can you talk us through a use case here, Shannon? I mean, we of course we had a couple big cybersecurity / ransomware attacks. I can't even remember if they were this year or last, to be frank. But the Colonial Pipeline comes to mind. The was it JBS?
Yes, the meat factory. Yeah. There was the big dairy factories. I think it was in, was it Wisconsin or Indiana, something like that. There's a lot. And
so can you take us through a use case here of how Tego could be used, you know, in one of those scenarios?
Sure. So one of the things that I could say is that we've actually had an incident with a customer who basically an IP address was flagged as 100% malicious within their environment. They didn't have Tego at the time, but they knew that we had the threat intelligence. So they reached out to us and they're like, I've been told that this is really, really bad. What is this? And, you know, do I need to be concerned about it? So we plugged in the IP address into our threat intelligence platform. And within a couple of seconds, we were able to turn around and tell them, this is an IP address. It's in Russia. It's known to be associated with this threat actor group. They're known to brute force attack servers. And so the customer, because they didn't have our dashboards, they actually had to go and see which servers of mine did this touch. After that, with Tego and everything like that, basically the customers are able to see those matches right away and just on the click of the button get all that contextual information about why that certain IP address or URL is bad within their environment. So again, there's the phrase speed to decision. So Tego allows security operations teams to have speed to decision by basically having all that information at their fingertips. You know, they don't have to go out right now. If you don't have Tego, and you would have to go out on the internet and go plug in, you know, find an IP reputation service or something like that, or you know, go find somebody who has some information about the IP address and figure out why it's bad. And that takes a lot of time and effort on the part of the security analysts.
Was that phone call at like 3 in the morning? Like totally?
No, there are those, of course, you know, because cyber criminals love to attack over the holidays and love to attack on the weekends when they know, you know, the IT staff aren't in the office. So even the FBI and CISA has been issuing warnings like over Labor Day and over Thanksgiving. It's like, you guys need to have some plans in place in case an attack happens.
Yeah. A question from the chat here from NCal. How does Tego compare to companies like CrowdStrike, FireEye, Zscaler? You know, in terms of your implementation, in terms of your cost, you know, what you can even do.
Mm-hmm. So FireEye, CrowdStrike, those are more, I would say, kind of like on the antivirus, EDR, next generation EDR service, which are sit on the endpoints of the enterprise. So what we're doing is that we're sitting in the SIM platform, which allows us to have a very holistic view of the entire enterprise. So we're able to see, you know, everything that happens at the firewalls, the computers, the switches, whatever is being fed into the SIM platform. Zscaler very much on like cloud infrastructure. I'm not sure if they actually have a threat intelligence offering or if they're more, I'd have to check into that. But really what Tego is doing is it's taking all that threat intelligence, plugging it into the SIM platform where the security operations teams are working, and then finding those matches through the dashboard. So really giving a holistic view for the security operations center.
Good question from James in the chat. He's noting, you know, the ease of which it is to create a fake IP address, right? And disguise. I mean, I could frankly Google it in 10 minutes probably and figure it out. So how do you work around that? Because it is pretty easy to mask your IP address. So so when you say you're hunting for, you know, fraudulent, not fraudulent, you're hunting for problematic IP address. I mean, how do you cut through the fake ones and find the real ones?
So that's part of all the analysis that we do with our platform, in taking in all the different threat data lists, finding out which IP addresses have been flagged as malicious, as well as, you know, CISA, the FBI occasionally put out information about threat actor groups. So we put that into our platform as well. So usually those are already vetted, but we do take the case, you know, in case of false positives and such, to remove that kind of information. But we go through a lot of vetting, and I would say curating of the threat data sources before we bring them into the platform, because we want to make sure that we're serving the most timely and relevant data to our customers. So if it's a fake IP address that somebody's using for one time, it's most likely not going to be in our threat database.
I'm wondering how the pandemic affected your business. You know, we talked about a couple. It seemed like for a hot second there was like every other week there was another cyber incident with food plants, pipeline, whatever. You know, and it seemed like the pandemic just sort of just increased the amount of activity happening in cybersecurity. Was that the case for you? How has the last year and a half changed for Tego?
So for us, it actually helped us accelerate our development a bit. So we were really in R&D until October. So we were working on building the platform and everything, but and building awareness about what we were doing as well. So the pandemic didn't have a big effect on us, but I know it did have a big effect on cybersecurity teams, especially the security operations centers. There's just been a huge increase in the number of attacks that organizations are facing, because really with the pandemic, what happened is that organizations all of a sudden like exponentially expanded what is known as their attack surface. So if you think before the pandemic, everybody's kind of corporation and organizations were probably, you know, confined to the building that they were working in, so they could have firewalls at the perimeter and that kind of stuff. Now all of a sudden all the employees are working from home on their home modems and their home offices, and all of those homes and all of those locations where the employees were working were all of a sudden introducing new vulnerabilities, new methods of attack to organizations. So for us, the pandemic didn't really affect too much. We were already kind of working remotely, dispersed across the United States. We really took our time picking the best and brightest to work with us. So bringing in, you know, our network from the State Department, from the United Nations, working with those folks again. So we at Tego decided from the beginning that we didn't care where in the U.S. our team was. We just wanted to work with them again.
Does that explain, you know, the expansion of the attack surface area, does that explain why it feels like there was more attacks in the last year? Maybe it doesn't feel like it. Maybe it actually is. I don't know.
I think I guess that could be a little bit twofold. So probably from your dad, thinking back to his, you know, he's probably like, I told you, I was right?
Yeah, you don't even
so
know the
all of
half
us security people wearing our tinfoil hats for so long, you know, saying we got to do something. But I think what happened in this past year is that there's been a lot of attention on the cyber attacks because they've impacted the daily lives of ordinary citizens. So if you think about, you know, when the Colonial Pipeline attack, there were gas shortages all of a sudden. JBS, you know, there was an impact on meat production, dairy farms in the United States, their production was impacted. So all of a sudden is like, you know, these cyber attacks are closing schools and affecting, you know, our supply chains and everything like that, and touching the daily lives of ordinary people. So, and all of a sudden all those people saying we need to do something. But you know, if you actually think about ransomware attacks, believe it or not, ransomware has existed since 1989, when it was delivered on a big old floppy disk to a bunch of attendants of a World AIDS conference hosted by the United Nations, believe it or not. And it demanded, you know, it encrypted the computer, and it demanded a money order to a PO box in Panama. So, you know, I think also ransomware has evolved over time, of course. Now it's with cryptocurrency and harder to trace the payments and everything. But we're seeing some success, thankfully, in law enforcement of being able to trace some of those payments, recover some monies, break the encryption keys and everything. So it's, you know, it's both a bad and a good time, I think, for cybersecurity.
All right, last question from the chat from NCAL. Is your threat database updated in real time?
Yes, absolutely. So we are constantly pulling data from all of the threat data sources, running it through our process of, we call it post-processing process, of essentially adding the additional context, giving, you know, that kind of who, what, when, where, how data to the threat data to turn it into intelligence, and then pushing that out to our customers. So as soon as we have the data, run it through our post-processing, we send it to our clients. So we're in constant communication with the customer's environment.
Got it. Good question, Cal. Thank you very much. Shannon Wilkinson, the CEO and the CFO of Tego Cyber. Shannon, pleasure to chat with you. Thanks for helping stop cyber attacks, and thanks for coming on the show today.
Absolutely, Spencer. Thanks for having me.
All right. Hey, I see my next guest here. My next guest has a very interesting story as well. His name was Andy Shape, and he has been in the merchandising, brand marketing space, really from the early days of the internet. He's the founder and president of Stran and Co. Let's bring him on now. Andy, good morning. How we doing?
Hey, Spencer. How are you? Thanks for having me.
It's almost not morning anymore, but it still is morning. So tell me about, you know, I was reading about you the other day. You know, you've done a lot of stuff in your career, but you started Stran & Co. Decades ago. You were sort of right. Am I correct in saying?
Correct.
Am I correct in saying? And you were maybe like early days in the idea of like using the internet for like marketing and branding purposes. So tell me just about that story a little bit.
Sure. So when we started, I founded the company in 1994 with another gentleman, Andrew Stramberg. We founded it together. We were both doing separate jobs and decided to start this instead, you know, and create our own destiny rather than work for someone else. And we started by selling holiday cards, greeting cards. We'd literally go door to door and say, do you want to buy, to corporations and say, do you want to buy Christmas cards, holiday cards, and most of the time it was the receptionist that would say, yeah, sure. And then we would say, well, we also sell fleece jackets and pens and promotional items, and would you like to buy that from us as well? And they said yes. But what we found very quickly was that they wanted to have access to that easier, have a better way to order that rather than having to look at a catalog, come and see samples, or do all that. So we found very early in our careers that differentiate ourselves by giving a technology platform that gives those customers access to those products, makes it a lot more efficient, makes it easier to do business with us. It really makes the ordering process a lot smoother for us and for them. So that's really where we started. You know, in the early or late 90s is where we really started developing our own technology solutions to offer those products online to our customers, almost a curated catalog of products and merchandise that they can order for marketing, for consumers, or for whatever needs they want to promote their brands.
But why did you even have that idea in the first place? Like at that point, the internet was like a couple of years old, right? So, well, the public internet, right? Probably was older than that, but you know, so like, how did you even think about that?
I had my previous job before that was a high-tech PR company that I did public relations for a bunch of high-tech companies. And started to recognize that we need to get into technology somehow. How do we do that? How do we transform this somewhat cottage industry into a more of a cutting edge industry? And started just recognizing that we can use that to our advantage and other people weren't doing it. And a lot of what we were doing, we were learning on the fly, trying to develop our own platforms, you know, trying things out and really experimenting and finding the best solutions for our customers. But really the genesis of that technology offering was really to try to bring technology into our industry, which has become more and more important, is really what in the future of this industry is really going to differentiate what the smaller players do versus the larger players.
Okay, so then tell us a little bit, walk us down the timeline a little bit more. So you go from hustling holiday cards, and then you're hustling other stuff, right? And so, like, walk us through the development of Stran & Co.
Sure. And then in the late 90s and early 2000s, we started to say to our customers, rather than buy these ad hoc, why don't you let us store them, create a web platform for you. We'll store them. We'll create a warehouse, a distribution model, so that you can order one at a time. It ships the same day. It really is a lot more streamlined, and customers started to really to do that with us. And one of our first customers was a company, Nantucket Nectars, that allowed us to do that. As they started, we started, there was a high demand for their product because it was almost a lifestyle brand. It was a juice company, but it was a lifestyle brand. So we started doing that for them and opened a store on Nantucket where they were selling merchandise, had a warehouse where we were storing merchandise. And when people ordered it online, we were able to ship it to them, not only consumers, but also distributors or their marketing team. So that's really when we started to do that in the early 2000s. And then we started offering some programs internationally where we would aggregate orders in the US, do some production offshore in China, and then distribute some within Europe, some within the United States, and really started offering that, so that technology really became a tool, almost a supply chain management tool for our customers, but from a marketing aspect.
Yeah, and I just want to be clear: the products that Andy is talking about, it's not like Amazon. It's not like companies are like buying stuff. Customers are buying stuff from Andy, who is sourcing it from somewhere or whatever, and it's not Andy's stuff, right? Andy's is basically doing brand. You're selling branding.
Yeah, for the customers. So everything that we sell is branded for our customers. So in the case I was talking with Nantucket Nectars, everything was branded Nantucket Nectars that we would go and produce through our supplier network. We don't own any heavy machinery or factories. We subcontract it out to a supply chain network of over 5,000 suppliers that we take advantage of. So,
sure. And today the idea of like brand marketing and creating your own branding products, everyone does that now. But like, was that big at the time? I mean, did people think like, oh, I am a beverage company, I need to have tote bags, we need to make tote bags for all of our customers, right? Like was that a thing?
It was. It's really changed though. Before it was the basic items. You get pens and maybe some tote bags, and that's about it.
Okay, office items.
We've wrapped armored cars with branding on it, down to some digital rewards as well. So it's really progressed a long way. But that's the one thing, and even more now than ever. So for a while, companies started to say, "Oh, let's go digital. Let's invest a lot into that." But really what ended up happening is people are getting inundated with that. So we really like this space because people get inundated with digital, with email, with online, with traditional advertising, that when someone gives someone a physical gift that has their branding on it, they have a really favorable impression of that brand. So if you get something physical, you almost want to reward them for spending the money, taking the time, having the thought about, I'm spending money and I'm giving you something. I'm not taking your time. I'm not asking you for anything. I'm giving you a gift. And that's very difficult to do that, to have that experience occur online. So doing that physical gift is really why we're, very excited about the future of our industry, because it really separates that experience and really gets that physical product into someone's hand where they say, I really feel good about this brand, and whatever call to action they're asking them to do, set up a meeting, create more loyalty, fill out a survey, change consumer behavior, which is maybe live a healthier life. If you're a health insurance company trying to reduce your medical costs, you may give incentives and rewards to people to say, if you do this, we'll give you this. So that type of merchandise really works well because it's a physical branded merchandise that they associate with that brand. So it's very favorable.
I'm wondering, because you've been around basically for the entire life of e-commerce as an industry, right? Just going back to those early days, is like, or as e-commerce developed, did you have to like convince your clients, I don't know, like Converse or Fidelity or like whomever, like, yeah, don't worry guys, like e-commerce is good, like this is good, this is the future? And were they like, what?
Yes. Yeah, good question. So some of our customers a while ago, we'd say, we want to create, we call it an online store. We want to create an online store. So right now we have over 280 online stores for our different customers. And they are used for B2B or B2C or B2B and B2C. So for those customers, we would go and say, we would love to create an online store. And a lot of times customers say, well, I don't need an online store. Nobody wants my merchandise. And we'd say, well, your marketing team, your field team, your sales team wants that merchandise to use as an effective advertising tool. And we can use technology to use that as an effective technology tool. So your sales team or your field team goes into your CRM or your marketing database and says, I want to send something to this person, or I want to order these to give out at a conference. You can track that and you can really measure that ROI. Our customers, we try to give our customers the ability to measure that ROI, to say, I'm using this product and look at what it's doing. And we have some case studies that are interesting about some video, physical video mailers that we sent out that really move the needle on that. But you know, that explanation that is saying it's more of a tool, a marketing tool for them. It's not really an online store. Other than those brands who do have, there are certain brands that have, like a lot of beverage companies, there is a demand for their product. People want it. You know, they want that product. It's not their core offering. They may be a beer company, but there's a demand for their product. So we'll execute that program for them so they can sell that merchandise, get that brand awareness out there, and have a small revenue generator for them as well.
So what exactly is the selling point? I look at some of your client, you know, you got some big name clients, right? You got names like Uber, Verizon, Samsung, Guinness, Coke, names that I wouldn't have thought I would see here, like Xfinity. I guess everyone needs their own brand products. Royal Caribbean. So what is the selling point to these companies for you?
Well, our selling point to them is we can do a lot of different things. Like Coke's an interesting concept or an interesting product to talk about. So a few years ago, Coke came to us. They had it originated with Powerade. They had a campaign called Just a Kid From, where it said just a kid from, and then you could put your city where you're from. And that was part of the Powerades campaign. Okay. And they wanted to launch a merchandise campaign that said, we want to offer people to go and buy t-shirts, hats, and swag that they can personalize and customize, so that's that personal connection. So we launched that store with Powerade that allowed consumers to go online, order a t-shirt, a hat, sweatshirt, and some other merchandise that was personalized with their city. So we not only did it for consumers who went on and ordered it, we also ended up doing it for bottlers. We ended up doing it for like they were trying to attract other retailers to pick up the Powerade brand. So they would go and canvas the buyers and send them, Just a Kid from Bentonville when they were trying to get into Walmart, to those people out there and say, get their attention. That would then those buyers would have a meeting. So we did that for Powerade, and then that also parlayed into the Share a Coke campaign, where we did the same product on Share a Coke for t-shirts, hats, sweatshirts, and other merchandise. So customize that for them, that not only sold that product and raised brand awareness, but they also use it from a marketing aspect. So that's really how we approach them is in that.
Yeah, and obviously you've got a lot of like big names, but and I guess the follow up to that is like, if I'm Coke, I'm a $220 billion company, why not just do it myself? Clearly they're not. So clearly you must have done something right there. But Yeah,
and I think what our pitch to them is, you could possibly do it yourself, but that's not your core business. You want to sell more. Your job is to market the Coke brand and let us do the blocking and tackling. We'll create the technology, we'll do the production, we'll do the distribution, we'll handle the service, we'll handle the reconciliation, the billing, we'll do all of that and just pay them a royalty. So that was much easier for them. That was a royalty model from the with Coca-Cola that they, we just did a royalty for that specific program.
What does a typical deal structure look like? Obviously it depends. Every deal is different. Every client's different. But in terms of length or size of the order, or do you have typical numbers that are pretty consistent, or does it vary greatly by who the client is?
It does vary, but we break down our customer base into what we call transactional and programmatic. Transactional is business that someone just comes to us and says, hey, I heard about you, or our sales team goes out and finds that says, I have a single need that I want. I need this. I have an event coming up and I need to give away, I have a golf tournament. I want to give away golf balls and golf package to everyone. Sure. And it may just be a one-time need. And that's typically around about 25% of our business consists of those transactional customers that one time come in and buy it. And that's not really our core business, but it's about 25%. The programmatic businesses are customers that are more, we have a contractual obligation to, they take use of our technology, our distribution, our fulfillment and warehousing. And that's about 70 to 75% of our revenue are customers that take advantage of those. And most of the customers that we showcase on our client list are ones that have some sort of component where we do that for them. And those customers typically, the longevity for them, typically we have a contract with them, which is a 3-year contract, but the longevity of those is about 9 years that those have been. And a lot of that is because we haven't had a lot of those customers for long enough. And usually we would lose those customers if there's an acquisition, if they sell the brand, if they go in a different direction. But the average tenure of those programmatic customers is about 9 years for us.
Got it. Okay, we got a few minutes for questions from the chat, so I got to get to this. Let me start with. Okay, we'll start with Maya and we'll work our way up. Maya Levine says, "Can you ask him to talk about their growth plans for next year?" Sure.
So obviously, we completed the IPO. We were able to raise $20.7 million. That really is intended to use for growth capital. So the first 27 years of our business, we didn't take on any debt. We funded it ourselves. So we know there was no run rate. We were not at a loss. We always operated at a profit. So the money that we raise is really not intended to run our business. It's for growth capital. And that growth capital, really, we have three things that we want to look at. And really that is getting more from our existing clients, developing new clients, offering more services, continue to invest in technology, innovation in technology, our front-facing platform that we use, as well as our back-end automation tools to make sure that our orders are going through properly and as efficiently as possible. And then also looking at acquisitions. And acquisition strategy is a big one because this industry is very fragmented. There's over 23,000 people who do what we do in this industry. We're number 32 in the country based on revenue. So it's very fragmented. So looking at that, there's a huge, tremendous opportunity for us to identify and acquire other companies that really complement what we're doing. And we're in the process of identifying some of those and really not just buying the revenue, but buying someone who's going to complement our business.
Here's one from Faisal. Hope I said that right, Faisal. How are you planning on attracting institutions now that you're public?
Institutional investors?
Yeah.
One way is talking to people like you, is getting exactly participating in things like the Benzinga conference and other conferences and really, letting people know what we're doing, letting people ask questions, have institutions, follow us and track the stock. But also, we want to prove our plan. This is our strategy, and we want to really, prove what we're doing through results. So we want to see our revenue grow. We want to see our profitability grow. We want to see a clear strategy and stick to that. And we think that that's really how we're going to attract more institutional investors is by saying we can capitalize on this market right now that really not many people have capitalized on. So it's a really interesting opportunity, I think, to take a $25 billion opportunity where the leader owns where the top player owns less than 4% is really a tremendous opportunity, and we want to take really.
Who is that? Who is the?
So in 2021, the largest was a company called Halo. It's private equity based. They've done quite a bit of acquisitions in the past few years. A company called Halo, and that's the largest. In 2019, the largest was a company called 4Imprint, which you may be familiar with. It's more of direct to consumer. They're more 4imprint is more attracting that transactional spend where someone goes online and says, I need something and I don't know where to get it. I go here. We're more of a marketing services agency that's much more comprehensive than them. So although we're competing for market share, I wouldn't say we're direct competitors, but they had owned 3.3% of the 4imprint in 2019 with $839 million in revenue. COVID was not as friendly to them as some of the other people in our industry, ourselves included. So,
how many customers do you have? This is from the chat.
We have about 2,100 active customers. We define a customer as someone who's done business with us in the last 2 years.
Okay. And one more here from Maya again. Do you foresee having to raise additional capital in the next 6 months? Well, they just did an IPO, so I can't imagine they would need that, but I'll let you answer the question.
No, as I mentioned before, we've operated for 27 years without any outside capital, so we don't need that. That doesn't mean that, if the right opportunity presents itself to us that is going to be good for shareholders and good for the future of our business, we don't want to rule anything out, but it's not really in our plans at the moment.
Got it. Andy Shape, the founder president, Stran & Co. I think it's so interesting when you talk to a company and a person like you who has sort of been in an industry since the genesis of that industry. I guess the last thing we'll wrap it up with is like, how has this is a hard big question, but like how has the branding world changed in the last 27-ish years?
I mean, a lot
for you. Yeah.
I'll give you an example. At the end of every day, when we first started, at the end of every day, we would drive to FedEx and drop off a purchase order and the printed artwork in FedEx Dropbox. We would drop it in there every day, a stack of FedExes, and then they would fax us a proof and everything. Now it's everything is much quicker. So we can react a lot quicker. We can get things done quicker. We have 24-hour turnaround that we can upload artwork and have something shipped the same day, versus that just didn't exist. So, technology has really advanced this industry quite a bit by being more nimble.
Probably made it easier for you to operate this business. Okay, this is actually the last one. This is from Johnny in the chat. Again, big, vague question, but where do you see the e-commerce market going?
So I do think that there's the two directions. The one direction, as I talked, is the 4imprint model, which is really going after that transactional one-time spend and really doing that, like 4imprint and custom ink, for example, that goes that way. But I think that the other side is more of where we're focused on, is being that marketing solutions provider that really has a curated program for those customers to really make a marketing impact and a branding impact for those customers who choose to use this form of advertising as a way to really move the needle for brand awareness, loyalty, and marketing spend. So I think going in those two directions, there will be consolidation where larger customers demand that type of custom curation, and the other ones, if those customers aren't big enough to do that, then they can go to those one-time online players like 4imprint.
Andy Shape, founder, president of Stran & Co. The ticker is STRN, recent IPO on NASDAQ. Andy, thank you so much for coming on All Access today. Have a good rest of your day, man.
All right, great. Thanks a lot. Appreciate it.
All right. So for those of you wondering, it's noon, it's time for Benzinga Live. Yes. Well, yes and no. Benzinga Live is happening today, but Benzinga Live will happen start 20 minutes later today. Because we do have one more guest lined up here who I'm actually currently waiting for. So while I'm waiting for her to join, I will do a quick check on our situation. We're at 212, which is not bad. Not bad. Can we get to 250? Second thing I want to say is going forward, these shows are going to be occurring on a more routine basis. So we actually have two more of these on the calendar for the rest of the year. We have two, not next week. By the way, I'll get to next week in a second. We have two more All Access shows the week after, the 14th and the 16th. I think it's a Tuesday and Thursday, 2 weeks from now. Those will be our last shows of the year for this show. And then beginning next year, we're going to do these one every single Friday. That's the plan. Every single Friday, recurring basis, so you know what to expect, so we know what to expect. Let us start after the calendar turns. But speaking of next week, special week, it is our final virtual event of the year. We've done, I don't even know how many virtual events we've done this year. I honestly, I lost count. At least, I don't know, probably like a dozen. I'm guessing like a dozen. Our next event is next week. Our last event of the year is next week. I will get to that in a little bit, but I do see our next guest here now, and I'm going to bring her on stream in a second. Jan Dalvi, she is the president and CEO of Acasti Pharma, who, just like another one of our companies today, also had news this morning. So let's bring Jan on the show right now. Jan, good morning.
Hi, Spencer.
Actually, no, good afternoon. It is afternoon now, so good afternoon. How's your day going?
Good. How are you today?
Doing great. I'm just mentioning that you had some news this morning. Did you not?
We did. Yeah. Very exciting. We have started a pharmacokinetic study for our first asset in our pipeline, GTX-104. This is a IV formulation of nimodipine. It's used in patients who have suffered a cerebral hemorrhage due to aneurysm. We reported that the interim data looks very good. We had to show that we're achieving blood levels similar to the currently marketed form of nimodipine, which is an oral form. And so we saw very good correlation. So what this does is it allows us to proceed to complete the study using the existing protocol for infusion. So it was good news.
All right. We'll come back to all of that. I just wanted to get to the news before I forgot about it. But first, just tell us about you and your background and sort of how you ended up here now.
Oh, sure. So just in short, I started out my career in big pharma, actually with Syntex in the Bay Area. And we were acquired by Roche, and I ran a very large business unit for them, global drug development organization focused on drugs in pain and inflammation. So I did that for a number of years, and then I became a serial entrepreneur. So I've started a number of companies that were successfully exited for investors, and also did some turnarounds, took distressed companies and turned them around and made them successful. In most cases, we had a nice exit. And then I found actually Acasti about 6 years ago. One of my past board members introduced me to the chairman there. So the rest is history, as they say.
Yeah. Okay. That's you just glossed over a lot of details there. So why though? I mean, you had a successful career, right? Why get back in the game?
Oh, I just love it. I'm passionate about this industry. I really believe in what we're doing. I mean, if you look at what the pharmaceutical industry did during COVID and the incredible response, to something so devastating, it's my passion to be in this industry and to identify, unmet customer or patient, needs, medical needs, and try to develop new products that can make lives better, So I don't see myself stopping this for a long time.
All right, let's talk about the Acasti pipeline. Tell us what you're working on.
Sure. So I don't know if you have a slide. Yeah, perfect. That's great. So the news that we had this morning was on GTX-104. So as I mentioned, this is a IV formulation of nimodipine. This is a drug that really must be given to patients if they have a subarachnoid hemorrhage. These patients, this is a really devastating condition. This comes on suddenly. These patients have no idea they have an aneurysm. They get rushed to the hospital, typically undergo surgery to repair the aneurysm. And then it's really important to manage blood pressure. In this case, they want to lower blood pressure to get more blood flowing into the brain so that the brain can heal. The problem is that the drug is very hard to solubilize. So and companies that have done it, the drugs create some really serious side effects. So the drug is basically given orally to an unconscious patient. So it has to be delivered through a nasogastric tube, which is not easy for the nursing staff. And then it's very difficult to titrate the amount of drug. If you think about it, it goes into the stomach. And if you've given too much and the blood pressure drops precipitously, there's no way you can get that drug back out. It's already in the body. So in our case, what we've done is we've developed an IV formulation of nimodipine. So we have figured out how to solubilize it and put it into a IV infusion, so it can be very carefully titrated by the physician and the nursing staff. And this is really important, again, because it allows them to really tightly control blood pressure. And, it's all about blood pressure in these patients. If the blood pressure goes too low, they have a risk of vasospasm, which can send them back into, for more surgery. Outcomes are much worse if blood pressure isn't carefully managed. So we really believe that we're going to help patients, have better outcomes, survive, and go on and be able to live productive lives. We have to show this, of course, in our future studies. But the study that we announced today is really the first step out of 2 steps to get this through the FDA. So with this positive results on the PK trial, we can move on to a safety study next year, and then we should be able to submit our NDA for approval.
Maybe I should back up for a second. For people who don't know what the term orphan drug or orphan drug designation means, that's what you're working on here. So explain that.
Yeah, exactly. So an orphan drug is typically an orphan disease is a disease that has on average less than about 200,000 patients that are diagnosed each year. And the FDA has provided incentives for drug companies to invest in these smaller, diseases, very important diseases, but there isn't the big, economic, return at the other end. So what the FDA has done is provided companies with the ability to get orphan designation, which we have on the first 3 drugs that you see here. And what that gives us is 7 years of marketing exclusivity. So no competition for the first 7 years that we're in the market. And that's in the United States. In Europe, we can actually get 10 years of exclusivity. What's great is it also allows us to apply 50% of our clinical drug development costs towards tax credits. So that's a terrific incentive. And orphan drugs can also command premium pricing. And so these are all really good reasons to invest in orphan diseases like this.
All right, so we walked through GTX 104, but you've actually got 3, as you can all see here, 3 different drugs in the pipeline. Tell us about the other 2.
Yeah, sure. So happy to. GTX 102 is a novel formulation of a drug that has been on the market for decades. It's a drug called betamethasone. This is a steroid, and it's used for a wide range of diseases, including autoimmune diseases and so on. Ataxia telangiectasia, and I'll just call it AT for short. This is a really sad disease. It's a genetic disorder. It's a progressive neurodegenerative disease, and it's diagnosed in kids really young. These kids tend to be diagnosed, in their first couple of years of life. It affects their ability to walk, to talk, to feed themselves. It affects coordination, and it gets worse as they get older. The other sad thing is that it affects their immune system, and it makes them more susceptible to infection. and also to cancers. So unfortunately, these kids tend to die young, typically in their 20s, of either lymphoma, leukemia, or even brain cancer. So there's no treatment today for these kids. Steroids have been used to help alleviate the symptoms. And there was a study done in Italy using betamethasone, it was an oral form, but a larger dose than what we're doing. We are actually concentrating betamethasone into a convenient spray that can be applied to the tongue. And it's literally 1/70th of the volume, and we're achieving similar blood levels. So we think that this will not only be more convenient and easy to use, but it's going to reduce the long-term side effects that you tend to see with larger doses of steroids. So we're very excited about this. And I should say that, we're working with Johns Hopkins, who is the global, really world's center of excellence. More than 50% of the kids diagnosed with ataxia telangiectasia are treated at Johns Hopkins. So it's terrific that we have this collaboration with them.
And then the last one.
Sure. So this one is probably represents the biggest commercial opportunity. This is GTX 101, and what we've done is reformulated again an existing drug, bupivacaine. This is a common analgesic. It's used in dental surgeries and other sort of outpatient surgeries. It's a very effective analgesic. It has a very rapid onset of action and provides sustained, pain relief. And we're focusing on post-herpetic neuralgia, which is the long-term, truly debilitating, severe nerve pain that can go on and last for months following a shingles infection. This is a huge problem. Actually, 60% of the patients who get shingles end up having severe pain for more than a year. And current treatments don't work very well. The frontline therapy is gabapentin. It's not very effective. It has a lot of side effects. Patients then progress to a patch. It's a lidocaine patch. You may be familiar with it. The difficulty with that is it takes a couple weeks for onset of action. And you literally have to cut the patch and put it wherever you're feeling pain. It can be on your face, on your head, on your back. And so it really interferes with the lifestyle of these patients. And most of these patients are elderly. So it's very difficult for them to actually, put the patch on. So again, what we've done is formulated bupivacaine into a topical spray. So you literally spray it on wherever you have pain. And the solvent absorbs or is evaporated very, very rapidly. So within 10 minutes, you have pain relief. So rapid onset of action. And we believe that based on the PK studies we've done, that we should see 12 hours of sustained pain relief. So this could actually be applied twice a day. People can take showers, they can go swimming, they can work out, they can do all of their normal activities and not interfere. Very importantly, we think this is going to reduce the incidence of opioids. So many patients have to go on and get a strong opioid, which we know has the risk of addiction. And so we hope that this drug can help to prevent that.
So I'm seeing here we have an IV, we have an oral spray, and we have a topical spray. What are the different challenges? I'm sure that's not by accident that you're doing it that way for each drug. But what are the different challenges for, you got 3 different drugs in the pipeline at the same time, and you got 3 different, methods of application here.
Yeah, so I think the challenge is more from a commercial perspective. We've got a strong chemistry team, and they've really done a terrific job of developing these formulations, patenting them. We've got over 40 patents already allowed. So I think the path forward is going to be fairly straightforward. All of these qualify for a 505(b)(2) regulatory pathway, which should reduce the time and cost that it takes, and also the risk. So these are straightforward development programs at this point. I think the challenges are going to be more around commercialization. These are very different markets. Your customer for the GTX-104 is the large neuro-intensive care units, and there's probably about 400 of them around the country. We believe we can actually reach them with a fairly small targeted sales force, but we're also going to be looking at possible partnerships for GTX-104. For 102, I mentioned that we already have relationships not only with Johns Hopkins, but there's about a dozen centers of excellence in the United States. So this is a market we can absolutely reach ourselves. So we can sell this product with a few sales reps and a marketing team that can mostly support the patients, do a lot of patient advocacy. I think the biggest challenge is going to be with GTX-101. This is a primary care product. So we are going to need a partner for this drug, it's potentially a drug that could have applications beyond PHN. Our initial target is to get approval for PHN, but we're already thinking about other neuropathies, diabetic neuropathy, for example. That's a big problem and very difficult to treat. Back pain. And other, neuralgias, fibromyalgia, and so on. This drug could have a market as big as about $1.5 billion in the United States if we look at those other opportunities. Wow. So we'll need partners for 101.
Okay, I want to bring up this next one here that is interesting as well. Let's go. There we go. You don't often see this from a company of your size.
Yeah.
You've got not just 3 drugs in the pipeline and with simultaneous studies, but expecting results overlapping each other, right? You've
exactly.
got a lot of upcoming catalysts in a rather short period of time. You can see there we're looking at first half of next year, several catalysts in the second half of next year.
Right.
To just tell why is this the case, and just was that just by design? Was it just this is the way it worked out?
No, actually, and I failed to mention this up front, but we're about 3 months post an acquisition of Grace Therapeutics. We completed that acquisition in August, and we acquired this pipeline. And I should mention, we've got another roughly half dozen of assets in the preclinical pipeline. So one of the reasons that we acquired Grace, we looked at, honestly, Spencer, over 100 companies. And we selected Grace because of the fact that they had 3, drugs in the clinic or about to go into the clinic, and this additional, pipeline of products. So, we're not going to be dependent on the success of any one drug, like we were before with our Capri drug. This was very attractive. Obviously, we could move quickly into the clinic with these 3 drugs, and yes, have overlapping milestones over the next year to 2 years. And these are significant milestones. These are significant catalysts, we believe. So the results we reported today give us a lot of confidence that we're going to achieve the primary endpoint for the PK bridging study, which we'll report out in the first half of next year. That then will allow us to go to the FDA, finalize the design for the phase 3. And I should point out that we only have to show safety, which we've already shown, actually. Obviously, we'll do it in a larger cohort. But the risk of showing, safety equivalent to the oral is very low. We believe that the IV, because it delivers a more consistent dose, will actually improve safety, and we hope improve outcomes. So we're going to include some pharmacoeconomic endpoints in that safety study as well, and we hope to be able to publish on that. But,
Nice.
right on the heels of that, we've got, a PK study that will be reporting out for GTX 102, again, comparing our top, oral spray formulation to the currently marketed form of betamethasone. Those results are expected before the end of next year. That will allow us to roll right into a phase 3 efficacy and safety study. And then the big program is GTX 101, and we expect some early human studies looking at dialing in the dosing. So this is a single ascending dose and multiple ascending dose study. Those results we'll see before the end of next year, and again allow us to move into phase 2.
Again, a lot of catalysts in a very short period of time. Usually I have to ask, like, oh, what's your next upcoming catalyst? But oh yeah, Q4 of next year. Okay, no, not the case here. We got some results coming down the pipeline.
Exactly.
Jane Dalvis is the president and CEO of Acasti Pharma, ticker ACST. Jen, thank you so much for joining us today on All Access.
My pleasure, Spencer. Thank you so much for having me.
All right. Hey, all right, so we got to wrap because Benzinga Live is starting, if not already started. So before I go, though, I just want to finish my thought, which was next Wednesday and Thursday. Yes, Wednesday and Thursday are not going to be normal days on our YouTube channel. We're going to have our last virtual conference of the year, the Benzinga Small Cap Conference. I'm going to end this show today with a trailer for that. If you haven't already, hit that like button. I'd appreciate that. Thanks to all of our guests today. I had fun. I learned a lot. I hope you learned at least one thing. I would be very curious to see in the chat who your favorite company was, who the one that kind of got the gears turning in your head the most. I mentioned that the one that I enjoyed researching the most was I enjoyed learning about helium. That was a lot of fun for me. I knew nothing about helium before I started looking at Avanti Energy. So that was fun for me. But some interesting thought-provoking companies today. Thanks to all of them for joining us. Thanks to you for watching. I'm going to end the show. Benzinga Live starting right now. And check out this trailer for our small cap conference next week, I think. Is this it? Oh, no. I didn't put it in here, did I? Oh. Spencer's fault. Hold on. Let's see if I have it somewhere else. No. All right. Forget the trailer. We'll play you have to stay tuned to Benzinga Live. You watch Benzinga Live. We'll play the trailer there. Catch you guys over there. And hit that like button. And thanks for watching. And see you over there. Nice, Spencer. Very nice. Bye, guys.